so we can break it down. I just wanted to get kind of like all the basic information out the way so it didn't take up a lot of the video time. All right, so here, kind of like going over the 15-minute high leverage RSI trade that we're developing, right? There's the strategy one, which is the trade itself being developed. Strategy two will be the entry, and then a system of how you play it. So here you had where you took a short on Ethereum, and the guy you follow that actually uses this 15-minute style, um, you jumped the gun a little bit early. You didn't have a blue moon on the indicator, and you were looking at the 15-minute. And he also told you that you should have waited for the next 15-minute candle because it did go against you for a little bit, and that's because it bounced. So both those scenarios give you a better entry. Now, now that you know that, his theory is to wait for the next candle to see the bounce, right? And our step would be to allow the moon indicator to confirm the short position, right? So what we would do there is, because, and just let me explain how what it works is, he's waiting for the next candle to confirm the bounce or the move, right? Which is kind of like it's a coin flip, because the next candle can print, right? And remember, you remember I tell you guys, if you're entering a trade, right, you enter 1 minute before the next candle, right? You ever hear me say that? Before your next candle hits, you enter a minute or 2 minutes before the next candle, right? So if you're entering the 15-minute candle, then you would enter at 8:13 or 8:14, 1 minute before the next candle. That's because most candles draw down before the next candle.
Sometimes they go up and then they go down, though, right? They go up a little bit further. Like they'll
Yeah.
retrace
Whatever. So
prior.
that's what I'm saying. They draw down. They draw
Yeah,
down, and then they push up.
right.
Right. So that's where you want you if you enter the 15-minute. Let's say you're going long, and you enter it at 8:07. Right. You're probably going to get where at that moment it might be in its middle push, and then all of a sudden it'll draw down from 8:10 till 8:14, 8:15. And then after that, 8:16, 8:17, you'll see the push. But your
Yeah,
entry would have been at 8:07, and you would have been caught in the middle push, and then it would have drawn down, and you lost a better entry had you waited to 8:13, 8:14. See what I'm saying?
yeah. I see what you're saying.
So in his theory, in a short position, if you're shorting, normally it's going to go the opposite direction for you. So, and his thought with waiting for the next candle, that next candle could have came in and literally just like dropped down and then bounced up. So the way he kind of put it was, it kind of puts you in a bad situation because let's say you waited for the next candle and it doesn't bounce, it actually draws down and you're shorting. Then you
Right.
decide to get in that candle, and you get in at it's say it's the 8 o'clock candle, and you wait till 8:01, that candle hits, and all of a sudden it starts dropping, and you're like, okay, I'm gonna get in here, and then you pick it, and all of a
Yep.
sudden it goes to 8:07, and now it starts bouncing up, right? Now it's
Yeah, you'd
bouncing
be
up
late
on
to
you
the
because
move
it's
and kind of
yeah
chasing it.
yeah it's pulling away from you, right?
Yeah.
So at that point you might end up in a bad situation because you can't really tell which way that candle is gonna go, right?
Right.
So you know, that's why you need confirmation of something. You need something better than waiting on that. And the only way you could really test that out or understand that is if you have steps that are designed in the strategy one to where you're going to make a trade. And then when you those steps happen and you enter and the trade bounces up. So let's say we're shorting and the steps are very simple. Right? You're going to wait for, the RSI to be above 70, and it starts heading down. The next thing is, okay, my RSI is at 75 and the 15 minute it is now heading down. Now, that is strategy one, is where you're deciding that this is the trade that you're making, is that the 15-minute RSI is heading down after being above 70. You now move to your second strategy, which is your entry, which would be basically saying, okay, I'm going to enter this trade when the 5-minute blue moon appears. And the blue moon might start flashing at 8:07, 8:08, right? And you say, okay, here it comes, right? Your entry would be 8:13, 8:14. And then you would take that entry on that next 15-minute candle before it prints. Now, if it jumps after that, you know, you put down how much it jumped before that, you know, and then you can see if your 5-minute blue moon came in like it's supposed to, right? And that way you have the data, and you can say, well, out of 20 times that I made the same steps, the same entry, it jumped 1% on me 2 times out of 20. See what I'm saying? Which allows
Yeah.
you to have information that the way you're entering the trade is okay because it only jumped on you 2. Let's say it jumped 5 out of 20. Still 75. It's still, and on your side, right? It's still 75% of the time not jumping on you. So it's something you don't have to worry about too much, but you can prepare for.
Yeah. Like when I got into that trade, um, I don't remember the percentage. I just remember seeing it was like nine, maybe $10, negative, which on a 20, I think it was a $15 trade. I can't remember. No, it was more than that. It was 35%, sorry, 25% of like a $70 account, I think I want to say.
Well, here, I mean, so your Ethereum here is your trade went for 168%, which was $22. So that means that the
Yeah,
trade was probably $15, somewhere around
that sounds about
$17.
right.
Yeah.
Yeah. So it went against me $9 and I was shitting bricks because I'm like, oh no, I'm gonna
Yeah,
get
because that's
liquidated
about
because
50%.
my liquidation was like 2,250 or something like that. And there was some on the heat map there. I use the heat map sometimes too. The heat
Mm-hmm.
map was showing some liquidation really close to that, and I'm like, oh great, here we go. But then I just kept watching it, and it kept getting rejected. So I stayed in it, and then I was looking at the moon indicator, and that's when I saw a blue moon pop up on the lower time frame. So I was like, okay, maybe we'll have some reprieve, and it
Right.
did. And then it broke down below, and I took my profits at.
Do you remember what the lower time frame that was? Was it the 2 minute, 3 minute, 5?
I kind of looked at all of them, so I don't really
Okay.
remember exactly which one made me
See,
say,
that one
okay,
that would have been the one to remember because that's when you actually seen the down drop,
yeah.
and that's the one you want to put
I
into
tend I
your.
tend to look at the two and the three more than the one is kind of choppy. You see all kinds of stuff
Yeah,
on that.
yeah, yeah.
Seems like. But then like today, like recently before the call started, I was looking at the indicator and like for XRP, it shows, a green moon, but then really the price never came up. Like it didn't have enough volume, so it showed another blue moon. But the
Mhm.
price was like a gradual downfall. So I was like, huh, some of those you can't trust every green and every blue moon
Well, that's
because they're not
right.
always 100%.
Well, yeah, no, because they go with the other steps,
Right,
right? If you're trading just moons, then you need to the moons. You have to now you're picking time frames, right?
right.
So that's where kind of like we have a saying where when it doesn't do what it's supposed to do, then we know what it will do, right? So moons are jumps, moons are pumps, signs of volume bursts are like buys that come in at a higher level, right? And if it doesn't move the way it's supposed to, then we know what's happening is that the volume's not there. So we know that if we're seeing that, we can start looking for the reverse. But this also depends on the time frame, right? So that's what I'm saying. Like right here, you're kind of where and that's where when the advice that you got from the other guy was wait for the other candle to hit and then see what happens, and if it jumps, grab that higher bounce to start your short, right? But that also doesn't mean it's going to stop bouncing at that point. That's why using the moon indicator, when you see that bounce, if you're using the moon indicator, let's say the 2 minute, and you see a blue moon come in, and all of a sudden you're waiting for the 15-minute candle to make your entry, and then the 15-minute candle comes in and it bounces, right? And you all of a sudden during that bounce you see the 2 minute blue moon show up. Then you can say, oh, this bounce is my entry because this is the end of we call it the hurrah moment, where they've closed out all the open orders and they start finishing off the buys, and now they're going to start pushing the sales, right? But the blue moon on the 2 minute would tell you that on that push on the 15, on that bounce of the 15, was the last push that's happening on the 15, because now you have a 2 minute blue moon, and then you can take that bounce and enter that, because the two minute blue moon is telling you there's volume is disappearing. See what I'm saying? But you need confirmation of what you think is happening or what's happening, right? So on here
Right.
is
Yeah,
like
you can't go off of just one indicator or one candle or one moon indicator.
right.
You want to
So
have multiples. Yeah.
yeah, or at least an understanding of what you think is going to happen, right? And in that scenario, you were looking at it and you guys were okay. The RSI was dropping below 70. You knew a short was coming, right? So in your head, you had an idea of what you wanted to do. You wanted to short Ethereum, and waiting for the 15-minute candle came in and there was a bounce to it. That's where his decision on that side would be, okay, here's my bounce, I'm taking this short, because he knows he wants to short here, but he's kind of like winging it to where he wants confirmation of the short happening before he gets in, and it's
Hmm.
something that you can't have in like steps, because he's waiting for two things to happen, right? If it bounces, he knows that he's seen this trade a lot, and he knows that, okay, a bounce is going to give me a better entry. So the odds of me losing it here is probably less because I'm getting a better entry than the current price. So he takes it, right? And on the other hand, if it drops down, he's probably going to wait for the next candle to come in to confirm the drop down position, and then he goes with the momentum of it falling, right?
Right. Yeah.
The trade has two different ways to win on it, but when he's teaching it, he's not explaining that, right? Because
Hmm.
he's kind of like, uh, when you do something so much times, it's like you kind of have a feel for it. It's like you hear guys go,
Right.
man, I really just trade one coin because I get used to it. It's
Yeah.
something that isn't teachable or reliable, because it's almost like trading off gut, right?
Yeah.
Where if you want to be successful, where every more people can be successful, you have to have steps that basically confirm what you think. And in this situation, confirming it would probably be the 2 minute blue moon, right? 3 minute
Hmm.
blue moon, right? And then when that bounce happens and you see a blue moon happen and you see a bounce, let's say you're waiting for the 5 minute blue moon and you're like, that's where I'm going to take this short. And all of a sudden you see a 2 minute blue moon come in, a 3 minute blue moon comes in, and then it bounces, right? At this point, you know that you have a 2 and a 3, the next is a 5. On that bounce, that's just a better entry for you, so you can take that entry because you know that the momentum is swinging towards a short. The reason why you know that is because you've seen the 2 and the 3 minute blue moons. See what I'm saying?
Yeah. Yeah.
There's confirmation to what you're seeing,
So
right?
yeah, just if you're staying on the 15-minute chart, you want to use the 15-minute chart to see your trade, but then go on the lower time frames to get your entry, right? Is that what
Right,
you were
right.
saying pretty much?
Strategy, right.
Yeah.
Strategy one
And that's
is
where like I was trying to tell him kind of what I was doing, and he's like, yeah, but we don't use the 3 minute, we don't use the 2 minute. we use the 15 minute and we stay
Hmm.
on the 15 minute. And that's like you're
Yeah.
saying, he's not like, it's one way, like if you could see things, like if he can see things on a 15-minute time frame that obviously I'm not seeing because I'm not him and he knows he's got his way of doing
Yeah.
it,
And he's
then
also
yeah,
what you
he's
got to
like,
understand. Like, he's not. He has his strategy one and strategy two,
right,
right?
yeah.
And
And it
you're
might be hard for him to teach
yeah, and he's not
exactly what
gonna
he's doing
yeah.
because,
And what you want to do is you want to take this whatever he's teaching you and just make it where you understand it better, right?
right,
You can't really explain it to him because now he all he hears is that you're not following what he's saying,
yeah.
and then you get more confused, right?
Yeah, because I was like, shit, I got a really good winning trade. I won half my losses back. And he goes, yeah, you did it. You didn't do what I told you to because I had actually what I did too was for confirmation was I drew a trend line from the top wick down
Mhm.
and it was like a little bull flag. And I'm like, okay, I'm gonna get in short right when that wick touches my trend line, and
Mm.
then it's probably gonna drop because it did that previously in the past few candles.
Right, right.
Add that into my 15-minute break in the 70 and we'll be good. Well, I entered it and shit that went up. And he's like, yeah, but that's not, I don't teach trend lines.
Trend
I'm
lines.
teaching 15 minutes. And I'm like, okay. So I was like, I feel bad because I feel like I'm making you, you know, uh, like I'm pissing you off because I'm not following the rules. He goes like, I'm not frustrated with you. He's like, I'll tell you, I'll keep repeating myself over and over again until you get it. I'm just
Right.
trying to help you win money and this and that, the other. But he goes,
Yeah.
who's the only person that's frustrated is you because you're the one that you got liquidated and you're trying to win your money back. And if you're not following the rules, you're the one that's going to be frustrated, not me, because I'm making money. I don't want to be making money while you're losing money. I want you
Right.
all to make money.
Right. So that's why you have to like when you're listening what he's saying, if he's telling you so, his entry is what? The 15 minute when it does what? What did he want you to enter on? The bounce off when the 15 minute bounces?
Yeah, basically, there's a couple different ways he does it. Like if you're entering on levels like 50, 20, 30,
Mm-hmm.
you want to wait for it to, break a level. And if it breaks the level, you want it to come down and kind of retest it before you go long on it. So if it's breaking the 70 and it comes above the 70, you want to, before you get into a trade, you want it to come back to the 70 and bounce, and then you get in on that bounce.
Yeah, that's a
Go
standard.
up.
Right. That's a
Yeah,
standard breakout and retest entry.
right. And then the other thing is sometimes like he would get into a trade and uh, like on flat top. So when a candle makes a flat top to its previous high, he'll
Mm-hmm.
get in and he'll go short and he'll write it down like, you know, very, very little bit with 500x, and he'll take profit. If it's at 150%, 200%, and he'll take profit.
All right. So say that again. If it does what?
When you see a candle and you see a wick, and you see the candle body is lower than the wick because the candle went higher previously,
Mm-hmm.
he'll wait for that candle to come fill that wick and be a flat top or say a flat bottom. So if it makes a flat bottom and there's no wick at the bottom anymore, he'll go long on it and he'll ride it up a little bit and then he'll close it at like a 200%. And then he'll wait for that candle to come back down to that flat bottom and he'll get in again long and ride it back up again. Sometimes that really is good. Sometimes you can get stuck with your pants down too. It's not like your system where you get in and you follow the system, you're going to be, really good, you know, with your entry. Sometimes even he gets stuck in a position and he ends up having to, add to it just to get it down or to get out of the trade and profits,
Right.
or sometimes takes a loss. So it's not like a tried and true thing with that candle flat top thing, but I think it's better entering off of the levels like you taught with levels and stuff.
Yeah, because what's happening is, a lot of times when people are trying to teach you a trade that they're winning off of, there's so
Hmm.
much other shit going on that they're doing that it's like they're buying down, right? So they're not getting liquidated because they have it cross, and they keep feeding money into it, and then eventually it takes a
Yeah.
bounce, and either they break even, or because they bought so much down, getting halfway back to even is actually like breaking even or a couple bucks, right? But
Right. Right.
that's something that has to be explained inside the system, right? The system is how do I what's the strategy of winning this trade, 88 out of 10 times. And that kind of puts you in a bad situation, because what happens if that's the strategy, we can't calculate the losses. So if you do that strategy and you're constantly buying in, buying in, buying, I mean, that comes down to, do you
Yeah.
have the money to cover a bad situation till it gets better, right? And then you calculate, so what is the max loss? So if I'm doing $100 trade and I got to put
Yeah. Right.
400 in to save it, and then I save that and I make $100, how many times that's going to happen will I be able to save it, or what time do I lose? Which time do I lose 400? Right? Because that's like losing
Hmm.
four bags, right? So if I did that
Yeah.
strategy 10 times, does it work? And it could, right? To understand what I'm saying is that most traders that are like professional traders only win 4 out of 10 trades, and they will lose 100% of their bag 6 times, right? So you know it's just that when they do win, the profits are 400-500%. It makes up for taking that
Yeah.
$600 loss, because the 4 times they won was equivalent to 4, 5, 6, 700. So at the end of the day, you know, two of those wins cover losses, and the other two wins 4 to 800. Right? You at the end of the day, you're like, man, I'm up 800, but you don't realize that you also lost 600, and it's a massive type. That is that's
Yeah.
old
It's like a
school
juggling act
strategies. Yeah,
sometimes.
it's old school thinking. You know, that cannot. It's a mentality that's really hard to uh, understand and teach without being that blunt, right? And then you have to your bags have to be set up that way. So if a person only has $100, that means that they're only trading $10. The trade has to go for 30 or $40, and they're going to lose six $10 trades. But the other four they win has to go for $40 to $80.
Yeah.
And you can do that style. It just comes down to, if that's your system. Like I said, systems are different than strategies. Your system has to be laid out that way, so that you understand that you're going to lose 6 out of 10 trades for all your bag, and the 4 times you win has to go for 2 to 600%, at least 2 to 400%, the size of the bag. It has to go up to 2 to 400%, and then that's why if he's using high leverage, if he's doing 500x, et cetera, et cetera, it's kind of it's allowing him to live on the edge there, and people can be successful there. But that's also the system that system that's been around for 40 years. That kind of puts us where 90% of traders lose, right?
Yeah.
So that
And
style
like
that's
when he was saying, you could have basically, he said I could have won my whole loss back, which is $40 or whatever.
Mhm.
And I said, yeah, but I didn't, in his teaching, he always says, remember to take profits, don't be greedy. And I wasn't doing that. I wasn't, because if I was greedy, I would have held.
right.
And like I said, I've been in too many situations where I was greedy, and I've held a trade that I was over $7,000 in profit before, and then I ended up, selling it at 3,500 instead of having that 7,500.
And then the
So
time the
instead
time
of
you do
doing
take
that,
money.
I said I'd rather take it. I'm happy with this 23, because I had my take profit set at like a $13 win.
Hmm.
And then when I look back at things and I was like, okay, this is probably going to go down to at least this because the liquidity heat map was showing me, 20, I forget what the number was. But I'm just going to slide it down just above that liquidity so it'll take it. And then, instead of having $13, I had $23. So I doubled it there already. So I
Yeah.
was already kind of being greedy. And I'm like, shit, I'm not even going to take a chance. Just let it take the TP and it hit. And I was happy.
Yeah. Well, that I mean,
But
so
I was like,
that's
because you don't know what it's going to do. It could hit that TP and just take back off, going up, towards the next liquidity up top. You don't
yeah.
know.
But that's what I'm saying. Like, this is where this is what we're teaching the mentality of a trader, right? Because in
Yeah.
that scenario, when it goes well, he says, "Hey, man, you could have made all your money back." But in other scenarios, he tells you, "Don't be greedy."
Right.
Right? See, that's why
Yeah, it's a catch
you
22
know,
sometimes. Yeah.
yeah, where that's why I'm consistent.
Yeah.
I'm not gonna. You can't. That's where people a lot of times they celebrate a successful move, but they celebrate the grand slam. But that only comes every 50 times at bat, right?
Yeah.
They're not celebrating the base hits, or they're not understanding small ball wins the game, right? So
Yeah.
that's
Yeah.
why what we're doing in Trading 102 is we're teaching you how to remove the emotions of trading and become systematic, where it doesn't
Yeah.
matter who you're learning from. If they have an ideal, right, and they're executing it, and it looks like it could be profitable, it's worth investigating. It's worth, what we call tearing apart, and
Hmm.
dissecting it to see is it possible, right? Because sometimes the ideal of it might be super possible if it's done correctly, right?
Right.
And that's what we're seeing here with this trade here, right? This trade here, we developed the fifth. This is our 15-minute 100 leverage trade. We had this trade in 2021, right? We've already seen this trade
Right.
100 times. Like, this is a trade that we normally do. I stopped teaching this trade because it's too hard for at that time for people to when you have so many trades going on in your head, you have steps, and it's like, okay, I'm waiting for a 5 minute moon to happen, and then I'm going to step in here, and then next thing you know, you're like, okay, I need a 15 minute. I'm waiting for the 1 hour RSI, right? You start to mix those up in your head, and now you're like, oh, wait a minute, is it a 15 minute moon or doing a 5 minute moon? And then you forget what the hell you're doing, and you're like, fuck, it's got to be the two
Yeah.
minute, right? That's why now,
Yeah.
we're at the process of, forget teaching trades, right? What we're going to do is figure out what you're doing now. And then what we want to do here is just teach you how to build the mentality of a trader so that you don't get emotional or misunderstand when things go really well and so, you should have held me, you could have done this and this. But the reality is you don't know what the answer is to that question because you haven't got to the point where you've mastered the entry, right? And fixed the trade, the strategy one, the trade, and then fix the entry. And then once you have that, then you can go back and do the trade 100 fucking times, and then
Yeah.
go, okay, I'm gonna take 150% every single time. And out of 100 fucking times, I want to see how many times it does 300.
Right.
And then if you look at it, you can go back and say, oh, you know what? 60% of the time, 60 out of the 100 trades, it went for 200%. So maybe I'll move my target to 200,
Yeah.
right? But you don't have that data
And
yet.
right. Right.
So right now, when it happens, everyone always celebrates the one time it goes up. That's why I tell everyone, you guys always remember when the trade keeps going, but you forget the fucking 90 times it didn't.
Hmm.
And that's when you give back all your profits. Everyone only remembers the one time that it went fucking parabolic.
Yep.
You got to become a systematic trader. The only way to be successful in trading is to have a system and a strategy, right? Right here, what we're teaching you is a strategy of how to, understand trading. It doesn't matter what system you're looking at or, how they're teaching it or what they're doing. is you got to know how to like, you know, develop a trade. Once you learn how to develop a trade, then you develop an entry. Once you develop the entry, then you can go back and see what everyone's talking about because you don't need people to say, "Well, man, that you could have held there, you could have done this. Don't be greedy." You'll have the data. You don't
Yeah.
you don't have to have a gut play. You don't have to
You'll
decide
have
when
no
to be greedy,
emotion.
not to
You could
be
just
not
enter,
greedy.
push buttons, and
Yeah.
you could be push buttons and getting in and getting out, no problem.
Yeah, you need to be able to do something that's, repetitive. Something that you can do every time and
Yeah,
get a result and then have a fucking answer, right? People when they
to be
teach,
like PC.
yeah, you can't have that type of, thing. So like the good thing here is like I can go here and I can see, I see where you posted the trade, right? But if I go back, what I wanted to look for was like, if you posted the
The
entry.
liquidation.
Well, no, the entry because I see your
Uh,
win, but I don't see like the posting of
oh,
like,
I entered. Yeah. Oh shit, I forgot about that.
yeah, and that's what's important. I mean, because it's kind of like obviously it's a little bit hard. So you got to think of it like this, right? Where the reason why when I do a class I try to keep it small in the beginning is because I
Hmm.
need everyone to the first 5 to 10 people to learn how to post, so that when the other people start coming in,
Yeah.
right? Everyone's like, hey man, you got to post. This is how you post an entry, right? Because if I'm looking at 10 trades, like let's say we got, let's just say the group right now we got 10 people in there, and they all were doing one trade a day, right? There'd be 10 trades here that look like yours. Now I got to go here and go, okay,
Hmm.
9:38 a.m. Right now I can go to my trading view at that time
Yeah.
and hunt that down. Man, I got to look at your entry, right? So 2,178 and closing, average closing 2158. So I can look at this and kind of like find this, right? But it's going to take me an extra, 5-10 minutes to like really hone in on that, and then
Yeah.
then break it down, right? So that's you do that, in 10 trades. That's an extra, hour to hour and a half of just locating a trade, right?
Mm-hmm.
And I can't,
I'm gonna try.
yeah, and that's where I can't break down to look at it to kind of like do more. So let's say here, so I'm gonna pull up trading view here, and this is where kind of, and this is also for you to have the ability to like understand how to like break down a trade, right? So trading 102, that whole course is really designed to do one thing: teach you how to develop a trade, right? So in order to develop a trade, you got to understand like how to do that. So let's take a look here. So if I look at your Discord, this was today at 9:38 a.m. So we'll say you probably got in there around 9 9:30 a.m. something like that. But all right, so 9:30 a.m. I'm looking for 2178, right? So I can go back into my thing. I can take Ethereum, make it a little easier for me to find. I can go to 1 minute, and now I just have to go back and go, okay, so here's my day. Here's where we're at today. I'm going back to 9 a.m. on the 23rd, right? So I can slide down here, and now here's where I can start seeing I have my time. Now I'm looking at yours, and I can say, all right, so now I jump back. What's my 2178? So now I look for 2178, right? Price label. 2178, right? And then once I locate that price, I can see that more than likely here's your 8:30 a.m. This is probably where you saw this move, somewhere in here, right? So now I have an idea of where you were at least looking at. If I go to 9:30 where you posted, I can see that's where the short fell down. So the other part of
Mm-hmm.
it, so now I have my 2178 line, which is here. So I know you're around here somewhere, right? But I'm not sure because you didn't enter your trade and then post. If you did, I would know exactly where you were here. So now I'm guessing in between here because you could have entered there or you could have entered here. See what I'm saying?
Right.
So I don't know your true entry, right?
Hmm.
So
So I'm about to post it in the, I'm about to in the chat,
yeah, and we can,
where I put where I entered and what.
oh, the time, yeah, yeah.
Uh, yeah, right here. It's in the chat. Uh, so
So what I'm
paste.
gonna do here is
There it is.
I'm gonna, and more than likely it's probably at the 8:41.
So yeah, my time right when that green wick hit that trend line is when I entered. So it went up in that candle, and then the next candle went up before it dropped back down and created that hammer, that red hammer candle.
Right. So you kind of entered. So you more than likely you probably entered somewhere off of like 8:40. So what time is your trading view say right now?
Right now, it's 11:10 on mine, 11:12 current time.
Is it saying 21 or 2012 or 2212?
Oh, for price?
No, 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 no. For your trading view. So like on my time, I have UTC. So mine will say
Oh,
2112
let me
Army
see.
time.
Mine's New York. I set it on New York.
Okay. So you're in the AM.
Is that if that's helpful? Yeah.
Yeah. So yours should be saying right now.
Not
Is it should be
mine's
12?
11:12 p.m. right now. 11:12 p.m.
Okay. So if we look at this here, right? So we know that you've came in here around this time. So look at your yeah. There's ways to look at your when you did enter here, but more than likely you're probably I would say you're probably here somewhere before that big push. And if you're doing the 15-minute, you're probably somewhere in this point here at about 9 o'clock. So if you look at your trade when it executed, it's probably going to say about 9 a.m.
That's probably about right because I think 2 hours ahead of you. So I was like 11 o'clock or something.
Yeah. So you're somewhere in
Yeah.
here on the let's see.
Look in the chat. I posted a picture of it. Not in Discord, in the live chat.
Oh, I know you guys do that all the time. I don't know where that is.
Oh, I'll just post it in Discord then.
Yeah.
Let's
I
go
know
to
live
Discord.
chat has a thing on it, but when I'm on, it doesn't let me like see the post.
I'll post it in the free chat. There you go. Free chat.
Let me see.
So right where that circle is my entry. When that wick hit that trend line is when I entered it. So it immediately went against me, and then the next candle went up higher before it fell back down.
All right, so you're on the 15-minute there. All right,
Right.
let's see.
And then when I sold almost to the bottom of that candle body, and it wicked down a little further before the next candle started. And that's where he said, hey, you should have got that next candle for sure before you got out. And I'm not trying to make him sound like, a bad guy because he's
No, no, no,
not.
no, no.
Yeah.
All right, so yeah, yeah. So we were right there. So this is the candle you entered here. See?
Yep.
So I mean, I can find your candles, and break them down. It's just easier when you have the time
Mm-hmm.
and there know exact one you have, right? So now we know at this
Yep.
point, um, looking at 2178.32. So now 2178.32, 2178. So I know you're in this candle here somewhere at this point here, 32, somewhere right there, right? And I can get rid of this one because that's the other one. And then there was this spike that happened, which was the next 15-minute candle, which spiked on you. So you had two red candles in a row. You decided to enter, right? Now the only thing I don't think it tells me, yeah, it doesn't tell me the. So this is what we talk about when you do the entry. You would be entering here um, normally right before the next candle, right? Which means this: more than likely, this candle, as it started to kind of like move down and it started to pull back, that's where you would be, and that's probably where you're kind of at here. Is like it was pulling back here, and then you entered, and it had a little bit more spice, but it's you couldn't really do too much more on that, for that scenario, right? So now let's kind of box this up real quick. Now that we kind of have a section here, right? And I just want to take a quick peek here. So this is your trade zone here, and I'll make this orange real quick for us. Okay. So now that we have that set up, we can say, okay, what he was waiting for was the next 15 minute. He saw this bounce and he took a different entry to get himself in that zone there. And that's where he said, yo, you could have got there and had a better entry. Now, he wanted you to run this down, and let's take a look at the RSI, because he doesn't use Stochastic or anything. He just uses the RSI, right? So the reality
Yes.
is, his RSI would have looked like this. And then what he was basically pointing out was you could have held on until it broke below, I think, the 50. And that's what that line is. That's the 50.
Yeah, I think when I exited it, it was still at like 60, maybe 60 or something like that when I
Right.
exited.
But here's the thing that you got to understand that these things, the lines only print out every candle. So this right here, the only candle that you would have been able to kind of see before it broke the 50, you have this candle here, and then the next
Hmm.
candle would have printed here, where it's hitting the 50.
Right.
Now, more than likely, it's probably going to bounce off the 50, so getting out of there's a good thing. The next candle would be here, where you see that it prints down. And then by the time that you see this candle going up, this is the one that broke the 50, right? Which would have
Hmm.
put you somewhere in here, right, on this
Yeah.
candle here. Now, the problem is the very next candle, which would have printed here, right, is when it bounced up. You wouldn't have
Right.
seen that bounce up because if you're waiting for the 15-minute RSI to actually, show you a trade or what you should do, then the next trade would have, bring that green candle to where it showed you that it was going up, and then you would have saw it later, right? So if we take a look at this, let's go down to 1 minute. So if you're holding this, right, and you're kind of waiting for the 15-minute to show you the move, that the next 15-minute candle would have bring you up into this zone here. So at the end of the day, no matter what happened here, if you waited for that, your out would have been here, right? So based on your entry and where you're at, that's kind of like the move that would have happened there. And let me fix this real quick. All right, so Joey, which would put you like
Yeah, I'm here. I'm
all right.
here.
So when you make trades, Joey,
Mhm.
are you so far what he did? He put a trend line because he was seeing the trend bounce. Do you like use trend lines to do limit orders, or what's your normal like? How do you enter a trade?
You mean like with this system or like in the
No, no, just
past?
regular. Yeah, just in the past.
Um, so in the past, I'd make my lines for if it's set. I'd basically take all the tops, run like the tops, run the bottoms, and have a channel, and then follow the MACD cross is when I would look at the trade to whether I was going to get in to watch it turn up or if it would turn down.
And so you use the MACD strategy.
Yeah.
Is there a particular MACD indicator that you use?
That's I think I did. It was the
Like who's
I
the
would usually start out with the 714 I think 714 and 21 or 714.30, and then I would stretch out from there.
So yeah, break down like you pull up your trading view and let me know who's the creator of the MACD that you use. Right,
It
just
was this dude, Chris from Crypto Revolution. That's one of the first dudes I started following.
Chris Moody.
Mm, I don't know. Like he's like I don't
Well, it'll
know,
be
kind
like
of
you do you still have it on your trading view?
no.
Okay. So we'll figure out which one that is. Okay. So now when you do your just kind of like I understand when you build your lines, what time frame are you using for that?
Uh, well, depending where I'm at, like sometimes where if I'm seeing like the volatility or whatever, I'll
Mm-hmm.
go in and out, and I'm trying like in. For me, I'm like not doing it like numbers like you do. I'm trying to watch like the mood. I guess you could say the mood of the market to see based on if it looks like it has movement, look at my volume and then like stretch it out to see is this like a short-term thing that just seems to be popping off or what does it look like throughout the day?
Okay.
Because like if you take the chart you have right now, right?
Mm-hmm.
That looks like the where the red drops, that looks like, oh shit, what happened? But if you were to zoom that out and break it down, it doesn't look as bad when you would look at it like that, so to speak,
Yeah, different
in my
angles.
opinion.
Yeah,
Yeah.
that's what I was saying. So
So it can like
when you have those
Mhm.
breakdowns, what time frames are you kind of like running there?
So what do you mean? What kind of time frames am I running?
So a lot of times people when they do their support and resistance, they'll use the 1 hour, 4 hour to kind of find
Mm.
their channels.
So I would literally like as I'm going, like you know how like at the it'd be like at the bottom and you just like hit the one button, it goes like 1 minute and then the chart will be right next to it. And then it increases and you could go like today and then
Mm-hmm.
week, month,
Right.
uh, stuff like that.
Okay, yeah, because most of the time, let's say if I zoom out, right, and I go to 4 hour,
Hmm.
this is a 4 hour here. So that
Hmm.
means like I would, if I'm using a channel, right,
Hmm.
I would look at this and go, okay, here's my channels here, right? So, based on past, I have a top of my channel here, and
Hmm.
then the bottom is hitting here. So that right there would give me my channel over the last on a 4 hour period. That would kind of give me an idea of like what I'm working with currently.
So, so when you're okay, so the way I would draw mine is I would follow like uh I would be at the green where it starts to spike up. I would be at the bottom of that, and then I'd put it to the bottom of the green where it's at the lowest to the right, where you put your line through. So it would have been basically a channel like that, but the channel would have been sloped, just like the top of the highest high would have been sloped. Yeah, like that.
So
Yep.
you would have done this. You'd have been the trailing
Yes. Uh
channel,
huh. Right. And I would do that for yep, and for the lows.
something like that.
Yep. Yep.
All right. So on that particular, so are you waiting? So what would be? Are you waiting for a breakout below and then retest and go, or breakout above and a
Would
retest and up?
once you were in that channel, then you would look for the golden cross to see what it's going to do in that time frame. So
That's where
if
you're
it
using the
crosses,
MACD.
what's that?
That's when you're using the MACD.
Yeah. So that's like it would you would do the RSI and the MACD, and then so you want to watch the volume. Like dude said the same thing like you do, volume's king, and then it shows the momentum. So whether it if it crosses the MACD but doesn't have the volume going into it, then it's likely going to go back down. But if the volume's high and you make the golden cross, then you can expect it to run up.
And you're talking about right here on like how I have on my screen the cross.
Yep.
And
Mm-hmm.
you're is it
Yep.
does it look like this with the volume?
Um, yeah, but mine would be. I don't use Trading View when I was trading, or whatchamacallit. I was on I was on KuCoin,
Okay.
Bittrex. Yeah.
Okay. All right. So what I want you to do is like when you get a chance, see
Mm-hmm.
if you can find the MACD that kind of represents what you're used to on TradingView. So then we
Uh-huh.
can go back and like use it to kind of like implement it so it's a little bit where we can use it as an example.
Okay.
All right. So let me jump back into this. So um, Ethereum. Let me go back to the 1 minute here, and we're gonna break down his trade real quick here. So that way, when we go, because tomorrow I'm gonna jump on with you the next time we do this tomorrow, and we're gonna kind of spend an hour breaking down, kind of what you are used to seeing, so that we can kind of
Mm-hmm.
like piece that together. All right. So now, the basic thing here is this. So we have an entry point right here. He has his downside, which is right here. We can measure that out real quick. This is the maximum you could have done, 2.2. So if you're waiting for the 15-minute to bounce up, that would have gave you that. So if you're doing a 200%, this could have been a 460% move here, right? And that's just with when you have a system that you're going to follow, right? Then that's pretty much how you track it, right? So for him, he's doing the 15-minute, right? So what all he was saying was follow the 15-minute because he uses the RSI. Follow the 15-minute RSI until it breaks up, right? So for him, you had one move here, one move here, one move here. It kept going down, it kept going down, and then this one was the infinite one that basically says, okay, this is where the 15-minute would have printed up and printed a bounce would have been on this candle. That makes sense, Joe?
Yeah. Mm-hmm.
And that's kind of where, if you look at this and put it together, your 15-minute has to print. So it'd be this one printing off this side here. So that's kind of the candle that we'd be looking for in our 15-minute. Would have been off that candle there. So now we got to take this peak here and this candle here. Kind of see where worst case scenario, the jump will go here. So that's kind of where that prints there. All right. And that's just because by looking here, all we're doing is these candles print and then show you what they're going to do. So this move up wouldn't happen until here. Because you wouldn't see it here because it's still down. The 15-minute would have to print. And then putting that on the other chart would just be lining it up. It just puts you in a scenario where this candle here would have been the downside of the move, somewhere around here. So now we go to the 1 minute. So this is what I'm talking about before I leave this. So Joe, you see this?
Yeah.
So this is kind of like having the um, strategy, your closing strategy, right? Your system, right? Your
Mm-hmm.
system is basically how do you execute this trade. So if you're executing this trade based off how what he's doing is that once that trade starts to move down, right? And we can kind of break this down. Let's take a look at the entry point here was, and this is a little bit different too. So, and I'm just using and this is where this starts to head down, but this is let me draw this line here, because this is the 70, right? So I think the trade you were talking about here was basing it on it breaking the 70, right?
What do you mean?
For
When
the
it broke
for the,
down, you're trying to talk to me about
yeah,
the
the to enter the short. Like what was the
yes.
concept here? Was when it
When I
broke.
saw it breaking down below the 70, that's
Okay.
what made me want to go, yeah, go
Yeah.
short.
So what was he telling you? What triggered a short for him?
Um, he was not doing the same trade as me at the time. He was in a short before me, and I missed it, so I was going to take my own short based on that.
Okay. So I think his short was over here where he was
Yes.
playing this here where it kind of like it started to head down from
Yep.
that push.
Yeah, because he literally took a short. I had to get up, and one of my kids needed something. I got up, and when I came back, it was literally 2 minutes later, and he was already out of the trade and made his money. So that's why I was like, damn it, I missed it, and I had to get in my own. So I looked for that, and when I saw that breaking down again, that's
Yeah.
when I got in it.
Because I'm just gonna put here like the when it starts to head down, right? I'm just gonna put the red candles in here. That's where the shorts possibilities happen, right? So these red arrows are when the 15 would have printed heading down, right?
Hmm.
I'm gonna post these on these candles over here so we have a reference point of reference of where he's probably took this first one that you missed, and then you were getting the bounce up, and then the next one would have put you here. All right, so now that we got that, I can slide to the 1 minute, right? So all these red arrows that we're about to look at are basically where the 15-minute RSI started to head down after it broke above the 70, right? So you have an opportunity here. You have an opportunity here. You have an opportunity here, right? And you can see where it breaks down. There's always this pump, right, that I'm noticing. You see how it always bounces up right there? And then when this one hit, it was in this zone here. There was a slight. It stays level,
Yeah.
right? And this one does well. But that's also that's the that's kind of like the so what we have is okay. So kind of what we teach is what we talk about is there's a move, right? There's a first move that happens. There's a reaction to that move, and then there's the next move. You see what I'm saying? That's why we're always talking
Yeah.
about the three moves, right? Because it kind of gives you a second to like evaluate what's happening, right? And if you have these candles happening, right, where you see that move come down, there's a bounce, right? When that bounce starts to happen, and then the RSI prints this red downward candle, which is this basically representing the 15-minute RSI going down. You can see that there's already a move to the down. You're in the bounce move. You see what I'm saying? So when
Hmm.
that move started bouncing, that's where you would say, oh, with the 15-minute RSI heading down, that's confirming now that I'm seeing a 1, 2, 3 move that this would be a short position here, right?
Yeah.
Now, if we move along, it's the same scenario down here. Is if you're watching this and you're seeing where this one's a little kind of more a little more subtle, where it's having a lot more moves in here, right? It's pushing
Hmm.
up, bouncing, pushing up, bouncing, pushing up, bouncing, pushing up, and then you notice right here there's a higher high. Then when it
Yep.
pulls back down, that next
It doesn't look in
bounce,
there higher high.
yeah, it's a lower high. You see that?
Yeah, we were looking at that and saying it's a double top and it's going to fall down. But
Right.
really, I think what we were looking at was we saw that peak and then it came all the way down, made all those up and down moves. And then right where your 178.03 is, that's where we saw that's a double top and it didn't go higher. So that's when we were looking at shorting.
Right. So what you guys did is you recognized its bounce here, and then you've seen the double top go short, and that's where
Yeah.
you decided that you would go for a short.
Hmm.
Okay. So, and this is why when you learn to develop a trade, right? If this is where it's not it's pretty much like so what I'm trying to teach you guys with the trading 102 course is how to understand what everyone's doing. It's all the same shit, right? So when you break it down and you look across, I know what you guys are thinking in them trades because whether it's it's the same scenario. The double top actually is happens prior to that. right? The double top happens here when there's a massive push, and then when that push bounces, right, it creates its marker here, right? This is the level that would be considered the next level to hit, the 2192. This is where you would be saying
Mhm.
to yourself, if you're a trader, this is actually where you would be thinking to yourself, like, oh, okay, this is going to be where, I'll put that green, that the next time it hits that number there, 2192, that's going to be the short, because that's the true top there, because it broke through, came down, and then it hit it, and then it rejected. You see that rejection down there? Now, as we come
Yeah,
across, when you draw that line across, you can see here that's
that's
the
a double
same
top.
number that
Okay.
it's hitting here. So it rejects. It doesn't really quite get there, right? So we zoom in on here. It doesn't make that. It doesn't hit that level there until
Yep, I
that
see.
next wick right there. That was the double top.
Right. And then the one after that is the shorter.
Right. The one
That's where
after
you have.
that is basically what we look for is that once you have a confirmation of a trade that you have going on, right? We're going to look for the move, right? That's why we teach the 1 2 3, which is the pull down. Then there has to be some type of bounce to it, right? And these are all bounces in here that bounce up, all depending on the time frame, right? If we change this time frame, these bounces change. But more than likely, this
Mhm.
bounce here will be on their 15 or 10-minute bounce. That is the second move that we would confirm that from here we would take this short down,
Yeah.
right? So this is when you start to develop trades, you can actually understand what you're looking at, where you're not confused on, bull flag, bull pennant, bull this, bull that, right? Double top, triple top, right? The reality is, like, there's a lot of work going in here to identify candles, patterns, and shit like that, right? You put trend lines in there, and which is okay because you're basically you're giving yourself the moment to say, okay, if it goes back here, which it more than likely will, it gives you at least a target to kind of like look at. What you would also want to do there for yourself is kind of like track yourself on how you draw a line and decide like how much does it normally pass the line I draw, right? That's where you're
Mhm.
getting greedy. The greedy's on the entry. What I mean by that, if you draw a trend line and normally your trend lines get broken through a little bit, then just move your trend line up slightly from where you think you should put it, or put the trend line and then put the entry slightly higher, right? A more greedier entry. You see what I'm saying?
Yeah. Mm.
Right? So that way you're giving yourself at least the um, the ability to absorb a punch, right? So now,
Kind of like what I did with the take profit, only with do that with the entry.
yeah, yeah. But here's what it really comes down to. Even with all the, double tops, knowing how to draw the correct trend line, knowing which double top is actually the real double top and all that shit. The reality is this. If we broke this down and we went and looked at these entries here, because here's an entry and here's an entry. Both these red arrows are 15-minute down entries, right? Both of them end up playing out pretty much in the same zone. If you take this candle here, more than likely this becomes your new entry, which at the end of the day puts us at the same spot, because you can see as you go across, it would have triggered anyways over here. See what I'm saying?
Yeah.
So that's whether which one whatever which one of these red candles you decided to pick, and we're about to break that down, we would have been in the same scenario as far as like the entry position, right? That's another thing, is like a lot of times people worry about, and then I'm going to rerun your entry here. So the trade actually went for 176 when we did the numbers right. So this would have been a 200, so about 180, right? 200x. So this would have been 200, and so this trade went for about 300%, 320, somewhere in that zone there. You had 200x on there, so three. So I'd say about 350 would have been your maximum on there. So you got about 50% of
Hmm.
what you're supposed to get in it. But then again, Yeah, that's what allowing yourself to let the 15-minute bounce. Okay, just so you have that in your head. And this is something we'll track as well and see what if that actually like pans out, right? So that's just saying that if you got in like you were, you held into the 15-minute bounce, which would have put the closeout somewhere around here. And then when we just measure that out and say, okay, that bounce would have took me out if I followed it, which would have gave me a 1.79, 1.8, 200x, so 400%, so about 360, 380% gains on there, right? Just so you have that in there. All right, so now
Yep.
when we look at this, right, deciding, you know, which one of these red, entries we would have taken. Now notice the second one doesn't have the bounce that the other ones had, right? Every other one of these red candles, when it came in, there was a bounce that happened to that candle. Meaning that if you were just following the 15-minute down, like you see here, what happened was if you would have entered here, there was a bounce here, right? And this bounce that happened was about a 0.34% bounce. So on a 200x, 100x, so that's about 60%. So if your stop loss was 60%, you would have got stopped out there. This one here comes in and it's a little less of a bounce, about a 1.5, so 30% would have been there. And the third one doesn't have that. So just so you understand, it's like if you have a 200x leverage on Ethereum, that the first one, if you would have entered when the 15 headed down without having a better entry process, you would have got stopped out because it jumped about 60, 65%, maybe 70. So you probably would have got wicked out there, probably would have got liquidated there, or at least lost 60% on your trade, right? So over
Right.
here, you probably might have survived that because that was about a 30 to 40% depending. So that was possible. So what we have now that we have these areas that we can see now, this is where developing the trade comes into play because this is where you can put yourself in a position where um, you can basically break down the trade and say, okay, all right, here's my positions of all possible trades I could have had, right? And now when we open up the charts, we can see the red arrows. We have them on each of these arrows on our RSI, etc. And now I'm going to get rid of this MACD real quick because I'm not using MACD on this particular trade. Okay. So now if I'm doing that as well, I can see how these coordinate with my other indicators, right? So now it's about time frame. So we know that on the 15-minute, these are where the RSIs are breaking down. So we know that's what's triggering us to look at this trade as far as the short. It's when the 15-minute RSI starts to head down, right? The other thing that we're looking at is that we can kind of take a look at the overall RSI on the 15-minute stochastic. We can see from there what it's doing. And then here you can also see on the 15-minute, you see how you have a green moon here? So as you go along, like the blue moon doesn't happen on the 15-minute until this section here. I'm just going to turn that blue, right? So that's the blue moon entry would have been off that candle. And this is why I said when you do shorts, looking at like the 5-minute, right? Now we can see here that you get, now this is where we would do like a moon reset, right? Where when you have a move that's happening, we want it to confirm, retest, and then run, right? So when that first red arrow comes in, you can see on our 5-minute we're green. It becomes a blue moon, right? There's a pullback there, right? We used to call this the 5-minute pullback. The 5-minute pullback is when there's a giant move. As soon as the 5-minute stochastic RSI breaks down, which is right here, it starts to head down. That is the entry that we take right here. That's called the 5-minute entry, right? We know that there's going to be a pullback on the first 5-minute, which is we eat this right here. And that's a high leverage trade that we do, which is always 100x leverage. After that happens, we expect a continuation of the run, right? Which is where we would let the blue moon go green. And then that's your basically after that pullback, we're getting back into this run here. And the next blue moon on the 5 minute is where we would decide that we're deciding that this is becoming an entry. And I'm gonna make this a little bit fatter because that's the actual reset moon. Okay. And that is where we would take this trade. So now when I break this down, if I look here now, and this is just off of, you can, this is called the 5 minute pullback. All right, it's a basic trade. Everyone learned this in the academy. On this 5 minute trade here, we would be taking the next candle, which would be somewhere in this point here. This would be our first short position here, right? We would take it off of here. Now, after that bounce happens, the real short comes into play, which is this one here, right? This is after the next run, right? So what are we waiting for? We're waiting for the move, which is a short. We're waiting for the bounce, and then the next blue moon. See how that worked out? See, this is a basic 5 minute pullback trade. That anytime there's a big push, we wait for the first 5 minutes to show weakness. We take that short, high leverage, grab it, and pretty much as soon as you see a red candle print on the 5 minute, it starts to print red. You enter that next candle. That would have put you somewhere in this spot here, and you just short that next move down. And we're not too greedy on it because we know it's going to bounce. So this moves ends up being, even if you're in a bad position here, about 2%. So you remember, we're doing 100x, right? So that's a 200% move. Normally, we would just close out at 100%. So we'll take a double up here. Once that double up happens, then we wait for the bounce. And the next moon, which is green and then blue again, that's the one that we consider to actually be a stronger possible move down, right? And that's where we're going for another 100%. Might be one that we hold longer, but that plays off of in this zone here, right? So now you're in the same scenario where it's pushing down here. You're getting a red candle, which is here, and that would trigger a short position there, right? Now what happens here is we get a bounce. Now for us, our stop loss, this is why having stop losses are important. On this particular move, our stop loss, and let's measure this out because we're only going for 100%, right? I'm going to slide down to the 1 minute. And for us, our stop losses are important because if we're wrong, it's quick and then we reset, and we don't want to lose too much, right? So in this particular move here, if we're getting in on this candle, we'd be somewhere here. This bounce would have bounced 0.2. This is about a 30% move. Our stop losses are at 30%, right? So we would have survived this bounce. Would have been real close, but more than likely we survived that. And then we get to where we have our pull down, which goes to here, 0.2. It's about 30%, and then we get stopped out on this next push here, right? So when this next push happens, we get stop lossed out at our 30%. All we would do at that time is reset, and then as soon as we got another red candle, we basically would re-enter on this position here, and we would take this move here. So now we lost 30% on this move, but on this very next short position that comes in, we're doing 100x. This is a 200% move. See what I'm saying?
Right, but then say you got stopped out, and what time frame are you looking to get back in there? Because you're not going to get another moon that fast.
Yeah, no. So as soon as we get stopped out, we're waiting for the red candles to come back in. So right here, when that 1 minute prints that second red candle, that's our entry.
Hmm. On the 1 minute.
Or kind of like how you did right here. As soon as we get this push up on this green candle, and then we notice that it's starting to hit levels. See how it hit this level twice? We would have put
Yeah.
an entry on this third candle right there because
Okay.
it can't break that trend.
Right. Yeah, it can't break above that line again.
Right. It's fighting.
Yeah. Yeah.
And plus we have two red candles in a row. So then we would take
Hmm.
that third red candle right there.
Doji candles too.
Mm-hmm. Well, candles don't
Yeah.
matter. I'm just saying. You don't want to put too much thought
Okay.
into it because then you're looking for doji candles. See
Yeah.
what I'm
Yeah.
saying? The more you put patterns and candles involved in it, the more you're like creating more. It's more steps to figure something out, right? The odds are that
Right.
if you're waiting for the perfect storm, it doesn't happen.
Yeah,
You
yeah. You
need
sit
very
there
simple
watching
things.
it and it goes.
Yeah.
Yeah,
The simple thing was here is we knew that we were getting a short here. It just happened to bounce one more time. The only reason it bounced there is because a bunch of people who didn't realize the short was coming and there was no more volume and this was the second pullback from the double top, they just put a bunch of limit orders in the wrong fucking place. And that's what retail does sometimes. That's why they lose their money. So we'll take the stop there, and then we know that on that next push, as soon as it starts to slow down and we see those two red candles, we hit that limit, that the trend line, and we try to enter at that trend line, right? Now, if this starts to work down, let's say we never get this green candle right here, right? And it keeps working down, then we would have got entered here somewhere. See what I'm saying?
right.
Because we know there's no more value. So if
Mhm.
we have a trend line set price here on the third and we don't get it, and then this candle's lower and this candle's lower, and all of a sudden we start going across the board here, then we just enter on this next candle here because we're starting to see the trend go low. And we're not going to miss this trade because we can see the volume's gone, right?
Right, right.
So then we
So
jump
that
on
would be
here
like
and say
that
boom.
would be that would be like the safer entry, but
I mean,
because then you know,
it's safer, but it also could have fell down 3 times on us. More than
yeah.
likely, if we miss this trend line here, and we don't get this candle here or this candle, more than likely it drops down to here,
Mhm.
right? Which is okay because we're doing a high leverage here anyways. So even if it dropped down to there and we got that level, at the end of the day, we're still grabbing 1.5%. Remember, we're doing 100x on here.
Right.
We got our first 100x and this is our second move. We lost 30,
Mhm.
so at the end of this would be 150%. So if you're doing $1,000 on this, you just made 1,500 bucks in an hour.
Right.
But see, there's a system to that, right? Without all the extra, right? It was very simple.
Basically,
I
I just
waited.
basically I
What do you
just got
do?
to change
Break it
my
down.
system from losing to winning.
Well, you have to understand why you're in a trade. Like I've noticed
Yep.
a lot of
Yep.
times you're in a trade, but you don't know why.
Yeah.
You're kind of like if things are happening to it, you don't know why they're happening, right? Where here,
That's true.
it's very simple. We see that there's a 15-minute pullback. We know based off how we trade our 5-minute blue moon means there's going to be a pullback, right? Which normally averages about um, 0.5%, right, on a pullback because it's just breathing, right? Well, if you're doing 100x, that's 50%. So a lot of times we won't be greedy. We'll do $1,000 trade and go for 30% and just snatch a quick 300, which allows us to be like, okay, that's the beginning, right?
Yeah.
Sometimes it just drops down and gives you 50 to 80%, 100% just on a dump because people panic, right? But we know what we're in, we know what our targets are, we know what we're looking for. And then once that happens, we're out. It doesn't matter if it goes for 200, 300% and then bounces. We don't go, oh, we should have held, right? Because that only happens 1 out of 20 times. We
Right.
take the guarantee. Then when it bounces, we know that this is considered a C trade, right? You hear some of my older students say, oh, that's a C trade, right? We know that that's the beginning of the trade, letting us know what's coming. Like a possible short is coming, so you'll see a pullback. Then there'll be a
Mhm.
bounce because people have limit orders. Once it bounces, that creates the double top or the triple top, depending on how many people are buying into the FOMO. Now, no matter what, we know it has to give up profits. It has to short. So once we see the first move, it's confirming that it's finally getting weak. The bounces are just people putting limit orders. There's no calculating how many people bought limit orders, but you know what's coming. And once we see the
Yeah.
limit orders become exhausted and we've seen the levels get hit and the bounces happen, now we're in a better position where these become B trades, which is B trades means that the limit orders have already been hit once. If they go down again and jump again, then or you have something like the 4 hour. Now I haven't even looked at the 4 hour. Now the way to do an A trade, all you do on an A trade is very simple. We slide down, we go to different time frames. So let's say we go over here and we use the 1 hour, right? So if I went to the 1 hour during this chaos, and this is where you're at in this trade here, right? So let's just say I'm looking at this trade, happen, and all right, that's where we're at here. What's today? March 9th, not the 23rd. We're over here. Let me find you. There we are. All right. So now, if I'm looking through this chaos, right, I can see the box, which is, if I just draw your box here, which is where you started your trade, right? So now, there's the reason why we have A, B, and C trades is because, get this out of here, is how this works here. So the first sign of an actually good pullback is when the 1 hour breaks down, right? So we can see here the 1 hour broke down here. All right, so that right there is what we call a C trade. So yeah, the 1 hour breakdown actually happens right on your orange line. You see, it could be here, and if I move it to its next spot, it's there.
Right.
Right. That's the first pull down that you see happening in that scenario, right? So now that the 1 hour is starting to head down, and let me pull this down here so we can piece together this a little better here. So in this scenario, your orange here, this is your first pullback was over here. You can see here when the red candles start to pop up, this is where the 1 hour starts to make its move down. So it's more in this blue arrow here. And I'm just going to change this blue arrow of the purple, right? That's the 1 hour. Now, going down with the 1 hour is great. Normally the 1 hour bounces, right? All right, so this particular trade here would be considered like a C trade, right? Because what we'd want is the 1 hour to bounce down. We then want the 1 hour to have a bounce. And then right when the 1 hour decides that it's coming down again, which is here, then that is what we would consider an A trade. So in this scenario where you're trading a C trade, right? Meaning there's going to be bounces. What's up, man? There's going to be bounces that happen in there. And those bounces are going to be where you have possible wicks. It's also letting you know that you're in a C trade, so there has to be a third move up, right? So don't hold this for a long position because it's going to bounce, right? So now if we take this and we go to the 4 hour, and we start to look over here, you see how the 4 hour right here starts to head down? I'm gonna make this dark
That
purple.
little green, yeah, I see that.
So that's where the 4 hour is. This is where we start looking at A trades. So now when I break this down, let's go to the 1 minute here. Now you can see that right here is the second time that the 1 hour started to come down, right? This zone here is what we consider the A trade section, because that's after the 1 hour came down. Remember the 1, 2, 3? 1,
Mm-hmm.
2, 3. So this is when the 1 hour started to come down. So this is the level that we would start taking the short position in here. Now this one, because we know it's on the second move, is that we know it's going to have a little more, weakness to it, but it's also not going to have so many jumps on us, right? We're not going to have so many big wicks come against us because all those orders are pretty much exhausted. So here you can kind of like, it's a little bit of a safer zone. But this is a trade that most people wait for because it's a lot smoother on its way. And that's the trade that, they kind of piece together. So this trade here is giving us our 100%. And if you're rocking, let's say a 50x leverage or something like that, you're going for 60% here. right? It's a safety trade. Lower leverage, softer moves, more consistently does what it's supposed to do. So let's say you have a $5,000 trade. You wait for the 1 hour to bounce. You take the second move down off the 1 hour when the 4 hour starts to head down, or at least it's exhausted and will then eventually head down, right? Because you see here the 1 hour triggers a trade here, but what happens is that trade comes down, and then what does it do? It bounces 1, 2, and then this becomes the best trade down. See what I'm saying? The 1 hour, right, creates the first move down. Then there's a bounce because there's limit orders. There's your bounce. Now we know that we're trading into the 4 hour down, right? So this is where we would start on this bounce. We would be looking for our short entry here at this level here, because we have our first move up, our bounce move, and then we would be looking for this to continue down. And this would be the safer move because we wouldn't, and I'll show what I mean by that is this, right? So over here, you have this short move that plays out, right? Let me see your box here. And then after that short move, you have this level here. What happens is it shorts down, but then there's this big move up. That move from where it went down to where it went up, about 2.7. So it almost like goes back to its entry point. You see what I'm saying? Then it starts.
Yeah, I see that.
Yeah, now it starts its move down again, right? Now this particular move down, if you look across the board, it's not as hectic. You see all these big chops up and down? Like when you
Yeah.
look here, it just kind of like, you know, consolidates on its way down.
Yeah, smoother.
Yeah, because I mean, at that point, the 4 hours exhausted, the 1 hour's already bounced once, all the limit orders are in, you know, and consider the way how much it's actually holding here. If I looked at this now that I'm looking at it, I can tell that the market's actually strong. So a lot of people were thinking this market's very weak. I can look at this trade here, and I know this is an A trade. I can tell by how Ethereum slowly worked its way down here. I can tell that there's money in this market because it didn't collapse when it should have.
It's like
It's
a controlled drop instead of just
yeah,
flat
just
out
slowly,
fallout.
worked its way down, and now it's on
Yeah.
its way up. But that's also by knowing what trade you're in, you can see what the charts are telling you. This chart is telling me that there's money in this chart. There's money out there because it didn't just plummet. People didn't panic sell, which means they're not looking for money. They're looking to hold. So this took a long time to work its way down, which should have been a plummet. It slowly worked its way down.
Until it reaches a certain point, and then all the limits hit again, and it bounces and goes crazy.
Yeah, because now you got big money who's buying here at this bottom. They've got a channel now, right? This is their channel. So every time it comes down to this channel, right? They bought the first dip. You see how the first dip came in and hit? Then they bought again here, and they said, okay, there's our dip. That's what that was. So everyone's made a decision that the price for Ethereum, when it fell down after all the jagged edges, it hit this level here, 21.24. That's a hold zone. Then they said, oh, that looks pretty good. Then a bunch of people put orders here. You see how it bounced again? And people were doing the right thing. They were going. This is what I talked to you about. Here's your trend line, but put it below the trend line. You see what I'm saying?
Right.
And then it bounced. Now what happened during that bounce is the people who didn't sell earlier are panic selling, and they forced another drop back down. Well, at that point, the panic sellers didn't outweigh the buyers because there was too many people going, this is a very solid level right here, and we're going to basically buy this level. And then you can see the next time it pushes up, it comes down. Where does it hit? It's that level again. So now as it goes across and it's building, when it comes all the way back on the 4 hour, which is way over here, what does it do? It hits that level again. So big money it's putting all is buying at 21.20. And now it's going to run. But I can tell that's going to happen because how it took so long to come down on the 4 hour A trade, which should have been a trade that it came down a lot faster. But that tells me there's people buying and there's people unwilling to sell, which is more important. So now, while we see all that happen, even though if you look at your indicators, I mean, look at all that volume there, right? And what do we talk about? Here's the 1 minute breaks up, it shows support. This thing is pushing up, right? Now if we go, actually the Ethereum's about to run. So if we go down here to the 4 hour, right? Look at the 4 hour. What did it do? It just broke positive. You see that? So another thing is this, right? If you're watching the charts, see how it broke low? We wait for the bounce and then we wait for exhaustion, right? So when Ethereum did this exhaustion move here, that would have been a clear indication to buy as soon as it started moving off the floor there. That's a bottom. That's a 20. So if you were in the master course, this is what we talk about is when these lines get down to negative 20, right? When the 4 hour reaches negative 20, see how it says negative 23 there? When it reaches that level there, that's where we buy because that's exhaustion of selling. There's not much more to sell. So I put out, if you look at, so here is a tweet about a day, I think it was a day or so ago, where I tweeted the guys that are like in, partnership programs where we're putting in, you see how there's XRP at 138, right? So we're putting in orders here where we're buying $500 every time it hits 137.8, 136, 139. So we picked up like $3,000-$4,000 worth of XRP on a 10x leverage at 137, $1.37. Now, if I was trading Ethereum, I would have bought the same thing. I wasn't looking at Ethereum. And I don't even like trading XRP, to be honest, which is just that the guys that are in that partner group have about $40,000 to $100,000 worth of XRP. So they need to know when to sell, when to rebuy. And 137 was the rebuy. But if I was in Ethereum, I would have been tweeting buy the shit out of Ethereum at 21 when it hit this level here, because that was an easy bottom. Yeah, right here. I mean, Ethereum at 2020, boom, we'd have bought the shit out of Ethereum right here.
Yeah, I bought it at 2009, and I was in a trade up until the other day when I got pissed off because I got liquidated. So I closed that trade too, and I was like, damn it, I should have just added to it.
Yeah, yeah, it's a big move. But that's why I say, like, sometimes when I'm like every time we talk, it's like right now it's just you don't have your steps. You don't have your strategy. Strategy one is like why I'm doing a trade. All right. Strategy two is how do I enter it? And you should need to do the same shit over and over and over and over. What's up? Fitz, what's up, baby? You need to do the same trades over and over so that you get the data. And then once you have the data, then you can go back and you get the results, right? Right now you're just kind of in a trade, out of trade. I mean, and that's why breaking down the trade that you're doing is that what the course that we're teaching now is trading 102. It's what you're trading, how you're trading it, based on what you're being taught, whether it's from somebody teaching you, a YouTube channel, a trade. I mean, there's a million trades out there, right? But we can break down each trading strategy the same way. So what you're going to learn here is in Trading 102 course is it doesn't matter what people are teaching you. I'm showing you how to analyze their system and develop the trade from their system that actually is more consistent than their very trade. They might have a trade that's very consistent, and when you develop it, you're just going to have confirmations that you will understand why it's doing what it's doing and how to then develop a system to execute even better than they execute. But
Right.
you'll have data backing up your decisions versus just instinct.
Yeah.
It's a big difference. Instinct makes you guess. Instinct has emotions. Instinct makes you second guess yourself. Instincts will make you stop doing a trade because it lost one time, even though it's 110,
Right.
because you put too much money in. And so let's say you do a trade for $50 and it turns 50 into 100 20 times in a row for you. And then you do 2,000 and it loses. You're like, fuck that trade.
Yeah.
That message is from my boy Young.
Just like I did with ETH this morning or yesterday when I got liquidated. I was like, fuck that. I'm just gonna close it all.
Yeah.
When I should have sat down and took my emotions out of it and said, you know what? No, actually, I'm gonna wait for this thing to bottom out and I'm gonna rebuy, even though it's gonna raise my price a little bit, and just been in the trade with a little bit more money, maybe a little higher leverage,
Right.
and then right now I'd be a happy camper because I'd be up.
Exactly.
But
But see,
instead, I'm out of a trade telling you how I got out of it, and I'm not too happy with myself for that.
yeah, right. Your trade. It's all
But
emotions.
it's
We don't need
yeah,
emotion
exactly.
trading. We need systematic trading. Why we're doing a
Right.
trade? What trade are we doing? Why are we doing it? What confirms that it's going live? Going live means that it's an active trade, and now we need to go to strategy number two. Strategy number two is entering the trade. How do I enter? What moon am I entering on? Is it the 15-minute RSI bouncing up? Is it this? Is it that? I don't. It doesn't matter what it is. It's your
Yeah.
strategy. And then your system is how big is my bag? What is my leverage? What is my stop loss? What is my target? And that's what I live and die
Yeah.
by.
When you say bag, that's
Hmm.
the amount of money in your actual futures account, right?
No, your bag is the trading bag. How much are you trading?
How much?
Are you
So
trading
like,
$100
because whenever
bags,
I
$1,000 bags?
okay,
Your trading
so for
account,
my
your
own case,
account
it
is
was a $20 bag
right. Your bag is
or a
what you're
$15
trading.
bag. Okay.
Yeah, but you have to
I
be
was the
consistent.
terminology. Yeah, my terminology was. I always say
Your
margin, and
account
that's what my bag
is
is.
your total.
Right.
Your account is your total. Your bag is what you trade. Like when some people say,
Okay.
"Oh, I have a moon bag," that's not their whole account. That's how much money they have in their moon bag. They
Gotcha.
might have
Because
they
I
might
was
have
saying,
$100 of Brett, right?
right.
Because that's their moon bag. Because one day Brett might go back up to 1 penny again, right? That's a moon bag.
Yeah.
Your bag is the amount of your
I see.
trades, and you have to repeat the concept where if you're going to do a trade review in development, if you're trading $10 per trade, you have to keep trading $10. Because here's what happens. Let's say someone goes in and say, "Oh, I'm gonna try this trade. I'm gonna do $100," and then they lose 30% on the stop loss. And like, damn. And they get back in the trade for $100, and they lose 30% again. Now they're down, $30, $30, and then they're like, "Fuck it, I'm gonna do $50," and the trade runs for 100%, right?
Hmm.
So instead of winning $100, they won 50, but they took two losses
Right.
prior to that, which was 60. So in reality, if they ran the trade properly, what would have happened is they would have lost 60, then won 100, which would have bring them where they were up $30. But instead,
Right.
they're down 10, possibly 20,
Yeah.
even though they won. And then they
Right.
start the process again and they do the same shit. So now you're down 20 instead of being up 30. If you do that 10 times, now you're down 200, which is
Hmm.
two bags.
Yeah. And actually, I'm guilty of that too. You know.
Yeah. Welcome to retail investors.
Yep.
That's trading 101, bro. You understand?
Yeah.
That's
Trying
why
to
I'm
learn
doing
those too.
that's why I'm trying to teach you guys. The course I'm teaching you is trading 102. It's
Yeah.
time to evolve from trading 101. Trading 101 is easy. There's a million people that are trading gurus on YouTube. Everyone trades support and resistance. Everyone knows to buy cheap, sell high. Everyone knows to watch your RSI. Everyone knows to trade with momentum. Everyone knows the trends. Everyone knows the Fibonacci's. Everyone knows everything. But still, 90% of the people lose. That's why we're teaching Trading 102. It's not the
Mm-hmm.
fucking 1,000 systems that make money. It's the guy in the fucking mirror that can't follow a system or understand why the system works or how to use the system. The bottom line is Trading 101 doesn't work for 90% of the people because it doesn't teach strategy. It doesn't teach execution. It doesn't teach you how to develop your steps so that you can execute the trade. It teaches nothing about that. It has no goals. It just tells you what is going to happen when these things happen, and then the rest of it is, oh, well, it does this because it's a really bull market. Oh, it did that because we're in a bear market. It doesn't teach you the expectations of trades, the levels of trades, the goals of the trades, what number you're going for, what percentage you should take, how many times does it win, what are the percentage you need to be high to win, what's the maximum does it win, what's the biggest loss does it have, what losses are you supposed to take, how do you risk management, what's the highest like everything that fucking matters in trading doesn't happen in Trading 101. Trading 101 is a million strategies on how to get trading or how to win a trade, right? It doesn't fucking tell you why, how to break it down, how to strategize it, and how to execute it. It just tells you what'll happen, right? That's like teaching a bunch of people to get in a car and all the different ways to hit the gas pedal, but never telling you where the brake is.
Yeah. Right.
That's why we're teaching a different strategy, right? And that's why right now you're in the boot camp, and we have where this is probably the fourth time we've been working on your trade. We started your trade a Thursday 2 weeks ago, which was the last
Mm-hmm.
day of the week, and then we went through the weekend and we started trading it Monday, Tuesday, Wednesday, and then we did where we postponed and said, okay, let's track the trades. This entire week, Thursday, where the Wednesday, Thursday, Friday, this entire week was supposed to be people posting in the fucking Discord correctly,
Right.
and we have no one who did it. The only one who was doing it was or posting or getting information up there was Young,
Mm-hmm.
and his mistake was he was trading. His phone goes dead. He didn't have his stop losses.
Oh.
Like how the I mean the system is has a leverage, has a target, and has a stop loss. You've never
Yep.
ever heard me one time in my life say, "Yeah, trade without a stop loss."
Mhm. Yeah.
But see, before we can go on and learn more trades, the very first thing is we have to understand how to fucking track the results. We got to learn how to develop a trade. We got to learn how to post the fucking tracking of the trades. Then once we can do the basics, which is the foundation, right? You imagine building a house and not building a foundation that wasn't bolted down and didn't have good cement. It's just going to tumble later. We got to lay the concrete. We got to get the barbed wire up in here. We're not doing that. We're not posting, hey, 2 hour RSI breaking up, 4 hour stochastic breaking 20, RSI breaking 50 line, right? Go through the chat. And that's why I kind of put you on it because you're a coach. Your part of your lesson is posting, right?
Mm-hmm.
That's why I told you to post that 2, 3, 4 times a day, right? So like here, Ed, here, Doge 2 hour, 4 hour green moon, regular RSI above 50 line, right?
Mm-hmm.
That's a guy. See, Ed's like Ed watches it. I can tell who watches videos because I can see the results, right? So
Right.
before I used to do courses, and it was a very like it was a 3 week course, 4 week course, and because most of this shit is really simple. Like Ed is an example of a guy who's in the top 10, right? if I said watch these videos and I move through, Ed could do a course in 3 weeks because he'll watch every video, post the way he's supposed to post, do what he's supposed to do, right? And to me, I just felt like, fuck, we're all grown ass people here. We're all above 18. We're all, most of us 30, 40 years old. We've all have jobs. We should be able to follow some simple fucking instructions. But what I
Hmm.
realized was after 2 years of academy and university and academy, I'm at the point where, man, we can't even, we're not doing the basics, right? The reason why guys can't evolve and stay consistent is because they can't build the foundation. That's why the 4 week course here, the master course 102 and the boot camp. I mean, the master course is a 4 week course. It takes 1 month to teach you. I mean, really, if you flew out to Vegas, it takes 4 days, right? But at the end of the day, can you repeat the process over and over and over to where you don't, fuck yourself up, right? That takes discipline. That takes accountability, you know? So it's like
Right.
going to the gym, right? And the first thing they do, they take your body fat, you hop on a scale, they break down what you should eat, they give you a calendar. Yeah, I mean, we got a million apps on how to eat proper. We got a million apps on how to prepare meals. But but 80% of America's still overweight and we still don't hit the gym.
Yeah.
Right?
Yeah.
We can download any app to fucking tell us we got AI now. Shit, we should be living our best lives. We're just not disciplined, right? So that's why the 4 week course that I'm doing now, I'm doing it from March until fucking December. Because this time, it's not about having, a handful of guys that go on to make 300,000 bucks a year. I want to change like the mentality of, I want a Discord full of people that hold everyone accountable. And if they're not accountable, then we just kick them, we remove them from free chat, and they'll, come back when they're ready to follow the damn system. Because you can only get better if you have discipline, right? Yeah, the other day I had I had my boy over here. What's his name? Joey C. So
What up? What up?
Joey's a very straightforward guy, right? He's paid for other shit, tries to get shit done. You know, he was panicking because I put you guys on 3 days. Like, okay, we're gonna spend the next couple of days just learning to post, right? He panicked because he's like, man, I've been here for a week, I haven't learned nothing. He doesn't realize his one-on-one he hasn't started yet, right? Right now, because he hasn't traded in a while, he really hasn't watched the videos. He didn't know where any of the videos or stuff was. He's learning the basics, right? Breaking down all this stuff for him and then sending him on his way would make him really good for about 2 3 weeks, and then he'd fall apart and be like, "What the fuck happened?" He wouldn't know why. Right now, he's just learning that there's a shitload of stuff already in the Discord, all types of videos he can watch, and now we're gonna eventually get to where he gets his one-on-one, and we start like seeing how he thinks about trading, how he maneuvers trading, and just what he knows. Because it doesn't matter if he comes in here and says, "Man, I haven't traded in 2 years." And he said, "I'm just gonna follow the system, VC." You know what'll happen? I'll teach him something for 3 weeks, and you know what he'll do? And the fourth, start implementing all the other shit he learned before. And then I won't know why he's losing, and then he'll be like, "Well, I was doing this and that," and then it takes him 3 weeks to explain what the fuck he was doing. So what we do here is the course 102 is like, let's just get to how you think, right? And then once we can show you what you're doing and how to develop out of what you're doing, then you can just self-correct. Right? Because once you got the steps on how to develop a trade, you can do it on any fucking thing that you're doing. You can pick up a new YouTube channel. You can pick up a new person. You can watch some shit on TikTok. Doesn't matter. You can break it
Hmm.
down, develop it, and go, you know what? Let me add this to it. Next thing you're a chef. You're just making different meals, right? Now you actually know how to cook though. And then we can sit here as a team and be like, well, what is that? Oh, now let's see this. And then all of a sudden we're all developing something. Oh, you know what? Do this, this, and this. And we might stumble upon an amazing recipe, but we don't know. So that's why teaching you guys how to develop and work from within and then build out is going to be the secret to this. That's why we're doing a 4-week course over 9 months. It's because people get busy. People go back to old bad habits. It's going to take, 3 months to break bad habits, reestablish. So I already know that. So, this is 5 years of teaching motherfuckers. This time around, after, 5 different courses, I've seen a lot of success. People make a lot of money. But now I'm like, I'm interested in one thing. How do we teach the masses? Where can we teach and get I want a group of people that hold everyone accountable. So when people come here, it's like the same shit. I want a Discord that moves past me in 2-3 years. As people come in, it's a village. Hey man, this is what we do right here, man. Here's the videos, and we'll just have very simple videos, right? Eventually, most of the videos will disappear, and it'll just be the concepts that we've created over the last year. Simple shit. We're gonna find the best way to explain the 1, 2, 3, which is simply Elliott waves. We're going to explain the best ways to find the A trades versus the C trades. And that's simply by finding momentum and value, right? But we're going to find a way to explain it. We're going to find a way to, develop it where every time we see something, we can repeat a process, rinse and repeat. And then our entry is going to be the same fucking entry. We're going to find an entry that works on every fucking trade. So when we say, man, someone posts an entry, we know exactly what they mean, and everyone knows exactly what's happening. And we'll get results. And if the results aren't what we want, then we won't do that trade. We'll just move to something else. But that's how we build a fucking community. So this is bigger than just a basic small course. This is a community course, right? This is why, we have multiple levels of people coming in here because, eventually as we start to break away, right, people learn other shit. Like the master course is more about systems, evolving, bigger bags, bigger investments, long-term investments, turning this shit into a fucking, 6-figure career, right? Where boot camp is like, okay, let's just fix your fucking mentality so that when you're in the Discord, you're actually a benefit to the Discord, right? You're holding people accountable. Hey man, post correctly. This is the video on how to post. Post the RSIs. What trade are you doing, right? How easy for you to say to someone posts on there, oh, I entered Doge. And you say, what trade is that? And we only have 3 trades, right? Right now we have 2. 4-hour RSI, 15-minute high leverage, right? And whatever they say, oh, I'm doing the 4-hour. You know exactly what the fuck that is. You say, awesome. Well, here's a video on how you're supposed to post, right? Go watch this video, and then so you know how to post, right? You don't have a bunch of people in a Discord guessing on what people are doing, distracting from the masses. Everyone will be posting a fucking trade, and when they post their trade, we'll know what trade it is. And then when they enter, we'll know why they're entering. Simple.
That makes sense.
So, yeah, it's a lot easier to help someone when you're like, well, what trade you doing? Oh, no, I was just, I saw the Fibonacci. Oh, bro. Here, go look at if any trade, here's a trade that I'm watching there too. I'm doing the 15-minute high leverage. Go watch this video, and then that's the trade you should be doing. And then as it plays out, you say, oh, you see how that played out? Okay. Yeah, we're not doing Fibonacci's in here. Like we do this. Unless we have a Fibonacci trade that we come up with. You know what I'm saying? But once we post the trades that we're doing, the entire community will have a line of trades that we do. These are the trades that we do. And when you post them, we know what you're doing. And we can all look and go, hey, you jumped too early, man. The 5-minute moon is still fucking blue.
Right.
I'm like, oh shit, I forgot about that. So easy to correct shit when we're all on the same page. That's why we're not like, we're moving at a very, consistent pace here because it's like, hey, we got to get posting down before we can move on. And once you learn how to post, then we'll learn how to make money, right? Because right now we're just guessing, which ain't never going to help anybody. We got plenty of this. The crypto market's 24/7, and every time it goes down, it's still going to go back up. I mean, we got 4 years of this shit coming. Like this ain't going nowhere. Like this not gonna happen. It's gonna be here. Now you just got to get into the groove of it. Because the more people come in, the only thing that's different is going to happen is it'll hold better. There'll be less pullbacks. but the trading will be the same. There'll be a push up, there'll be a dump. Why? Because crypto has no value. There's no product. It's not a company. You buy low, sell
Right.
high. And then more people will be like, well, I want to get in that game. They're, right now, just so you understand, Kraken and all these companies out here are creating these trading opportunities where, okay, so like if you did stocks, right, you could get like, or there's places where you can go where you try to trade and they give you an account and you trade their money, right? And there's all types of ways to do it. So the original way is this: you buy an account, you spend $100, and then you have to trade, and then if you can make their trading amounts of money and show that you're a successful trader, then they open the account to you and they give you more money, right? It's a funded account, and then you get
Right.
yeah, you get a percentage of what you win. Well, Kraken and all these other exchanges are realizing that that's a business, right? I don't do those type of accounts because I like taking all my money. But there's a lot of people that are like, shit, I only paid $100, but I have $100,000 account. It makes sense because you can trade more money, which brings in more profits. And if it's not your money, then if you lose it, fuck it. It wasn't your money anyways, right? So they're realizing
Right.
the value of that and they're going, shit, if a guy like VC got a $100,000 account from us, he could turn that into 200,000. We're going to charge him $3,000 to try to get that account. And if I fail at my 7-day trial to win a certain amount of money, they keep my 3,000. I have to start over. But the gimmick is, if you win, you get a $100,000 account. See what I'm
Right.
saying? You know how many fools are going to pay $3,000 and fail because they're giving them? And here's the fucked up part: they're limiting the leverage. You can't even do high leverage. You're doing like 5-10%.
Oh wow.
So the odds, when you break down the odds, I'm gonna do videos on this. To break down the odds to actually do it, you have to be a fucking good ass trader to get to the level they want.
Yeah, they make it sound really easy, and then you get in there and you're like,
$2,000 to
yeah,
try, and you barely miss. You're
yeah,
like, fuck, and you do it again. Because here's the difference: if you would have won, right? If you would have hit the number and your account was live, that $100,000 would have made you 20, 30,000. But you
right.
missed it, so you don't get that 15, 20 grand. You lost 2,000. So you're like, fuck, if I would have made it, I made 20 grand. Then you put another 2,000 in because you thought you could have won 20.
Hmm.
So you keep throwing 2,000. It's like futures. It's another way to get you to gamble. But the
Yep.
payout is like in your face. It's like, listen, imagine you making 20% this year on 100,000, right? Like, oh, that's 20 grand. Yeah, it only costs you $2,000 to do it. See what I'm saying?
Hmm.
Now you're gonna
Yeah,
have all
sounds
these
like a no-brainer.
fools. Yeah, it sounds like a no-brainer. Now you're gonna have all these fucking people dropping $2,000 every 7 days just to get two
Damn,
hundred
sure.
thousand dollar account.
A damn good business model, it sounds like.
Fuck yeah! I mean, I'm sitting here thinking like, how do I do that myself? I mean, that's the business we're in. This crypto, but that's what's
Yeah.
coming. So let me ask you: if all these exchanges are starting a business where you pay $2,000 to get $100,000, $200,000 trading account, do you really think the crypto market's going to disappear?
No, it's
I
going to
don't
be here
know.
forever.
Exactly. It's a goddamn casino. Worldwide casino,
Yep.
boys. It's going nowhere. But that's just so you know. So what you have to do here is you got to learn the basics of the mentality. You got to develop a very simple thing. First thing is, how do I develop a fucking trade that I can count on that wins 7 out of 10 times, 50 to 60%, and only loses 40% 3 fucking times? And I know this because I did it 100 fucking times. That's the first fucking part of the game. Develop a trade that wins. Then develop another trade that wins, because you're going to have a long position trade that might take 3 or 4 days or might take 2 weeks. Then you take another trade that could take, 4 hours to 2 days. Then you have another trade that could take 3 to 4 hours. Then you have a trade that could take, an hour. Then you have another trade that could take 10 minutes. You got to develop 5 trades over the next 12 months that win consistently, right? And the reality is you only need 3. I mean, if you think about it like this, right? If you develop one fucking trade, which you already have, the 4-hour RSI trade, that hits 5 times a month, which it does, and you had $10,000 in there, and you had a 30x leverage, right? So you made $3,000 5 times a month, right? Think about it.
Right. Yeah.
5 fucking trades where you're sitting there doing $3,000 5 times a fucking month, right? That's $150,000 a year.
It's a nice chunk of change.
Yeah. So don't panic. Stop trying to fuck the wheel up. Just learn how to fucking push it.
Yeah. That's where I struggle. Like I've got, I might have, say, before I paid for the boot camp, I had like $1,000 in my account. And then I've seen you guys post, you've got like a $300 bag. I have a hard time putting that much into a bag. Because I've been,
to be honest with you,
but you got to risk it. You got to risk it in order to win it too. And I've been trading pennies over here, thinking I'm making good trades with like, I got $15 trade and I win $23.
Here's a secret, man. I'm gonna tell you what Vegas does, right? So here's how it works. You you understand what is happening, but what they say, like perception's reality, right?
Mm-hmm.
So you understand what's happening. Your perception of it is actually backwards. And I'll give you an example. And this is for everybody. So they'll learn to trade a trade, right? So let's say I teach someone how to make 60 to 100% per trade. And they're trading $200, $300. And every time they do a trade, they're making $150 to $200, right? And they do this consistently. And they go along and they turn literally, they start off with $1,000, they end up at $5,000, right? And then they say to themselves, you know what, man? I wanted to make $20,000 this month. So then they go, fuck it. I'm gonna make $20,000. So what do you think they do? Instead of taking 50% profits, they start doing what? They start going for double that, right? Because they need to double their money. So they need to go for 100%. So they've seen their trades do 100, 150, 200%, right? Sometimes you see guys post 1,000% wins. So they start going, fuck it, we're going to take these trades and we're going to ride them out 200-300%, right? And then at the end of the month, you see less wins posted. So instead of winning 5,000, they've won 1,000 or maybe even lost. Now, when I talk to them and I say, man, what were you doing? They were like, well, I made 5,000 this month. I wanted to make 10. So I was taking profits at 50 to 60% and sometimes 100. So I said, fuck it. I've seen my trades go up to 200%. So I started setting my targets at 150, 200. I said, okay. But they weren't getting there. They kept going the other direction. So I kept getting stopped out. So I've been losing 40% on each of my trades. Now, the perception is that if you take a trade that wins 50 to 60%, that if you want to double your money, just close at 150%, right? Just double the profits.
Right.
Right. But the reality is the proper way to do that was if you're betting $300 a trade and you want to double your money and it's hitting for 50%, then all you do is double your bag.
Double your bag, take the same amount of percentage.
Right. Now, if you're smart, you triple your bag and lower the target to 30%. Mm-hmm. So let's say you have a $300 bag, right? And you're taking 50%. That's $150. You double your bag, it's $600. Now you're taking $300, right? But you need to get to 50%. Well, if you did $900 and you lowered it to 30%, which means less risk, easier way to hit your target, right? So right now I've lowered my risk by 40%, almost 50. I'm taking 30% because I'm averaging 60 to 80, But now my bag's 900. I'm still making $600 with less risk.
Yeah.
That's the right way to do it. Everyone else does it the other fucking way. They
Yeah,
double
you're
their
trading,
bag and then go
trading
for
with
100%.
$20 trying to make 1,000 instead of trading with 1,000 trying to make 20,000.
Yeah, but what I was going to say to you is that in your mind, this is what Vegas does, right? So Vegas has a guy. So whales come in, right? Whales play $30,000 per hand, $100,000 per hand on baccarat, right? And
Mm-hmm.
most of the time, they're just lucky, right? Some people are just lucky, right? A lot of motherfuckers, they're just, they were born that way. They have a very like high luck, and when they come in somewhere, their numbers come and they make a lot of money. So when whales hit for 400, 500, $1 million, Vegas doesn't let them stop. Like they'll comp them rooms and dinners and all this shit. It's not to, get them to like, to do it. They just want them to stay, because what happens is when you're a whale, you're betting 40, 50,000, 100,000 a hand. What happens is when you win all that money, you get to $1.23 million, $100 million, or even 700,000. You start betting less because you're like, I'm not going to give my money back. So then you start betting, you go from 100,000 a hand to like 5,000 a hand, right? And you keep winning, and you win and you win. And after a while, when you win that 5,000, it becomes 15,000. The only thing you think in your head is like, well, that could have been 150,000. So you keep going, and eventually what happens is mentality is, I'm not winning 5,000. I'm losing 145. So then the whales start betting back again. They're 50,000, and they say, well, I got to get that 150 I lost. I'm going to bet 150,000 a hand. And then they lose. And they lose again. And again. And within an hour to 2 hours, they lost what they took 6 hours to win. Because they were chasing the win. So when you say, hey, right now I'm betting $5, $10, but in reality you guys are doing 300, and you see our wins, right? You're in your mind, you're thinking, oh, when I do have a win for $5, I only win, or $10 or $20, I only win $26. Like you had a big trade there for 168%, you walked away with $22. Now, had that been a $300 bag, that's $450. So the only thing you see there is that you didn't win 450.
Right.
But what you're failing to remember is the win you had doesn't equal to all the losses that you're having.
Right.
Right? Before
I
you
definitely
can bet,
see that.
yeah. Before you can put a $400 bag down or $300 bag down, you first need to learn how to post. Right?
Yeah.
Step number 1. Strategy number 1, the trade is going live, post. Strategy number 2, the entry that you just took and why. I took the double reverse moon. I entered on a 10-minute green moon, right? Then you post a result. Once we see a result, and after, 20, 30 trades, and you're showing that you can actually fucking win, then you can start thinking about a $300 bag.
Right.
Right now, don't think about the $420 you didn't win. Think about the 4,000 you didn't lose in the last month.
Right.
That's the truth. That's why I say people like how you guys said, you see, you could have won all your money back. That it's not good advice to teach someone not to be greedy. You won 168%. You need to learn how to take that money over and over.
Yep.
What he should have said, man, that was a really good trade at 160. You need to learn to make 100% 10 more times in a row.
Right, exactly.
Not invite you to get more, hold longer and then not take any wins.
Right. That was my mentality on it when I was like, oh shit, I thought I did really good with 168 or whatever it was.
You did. That was great. That's what I mean.
But it wasn't, yeah. I mean, yeah, I was happy with it.
But all he was really pointing out was that you closed before he normally closes, which is kind of weird to me because he doesn't. His closes are kind of different, where he has a candle that shows a wick when it gets a flat bottom, he takes the next trade because he knows it's going to be a positive push, and then he closes
Yeah.
right away, and then he takes the next candle and tries to get that same positive push. That's not really a strategy that is, I would have to test that shit out for a while, but to me, it's like that's not going to hold up over time. That's something that you can't really teach, right?
It's something that, in my experience, it's you get caught with your pants down sometimes, and that's
and it hurts,
yeah,
right?
it can hurt if you don't get out of it. Yeah.
Yeah, and you got to be able to have that moment where you give up a certain amount. It's okay to, I mean, shit. If you master an entry, right, your stop loss should never break 15%. And if you're doing high leverage, never break 20. And if you're breaking higher than 20%, your entry fucking sucks.
And that's the thing. We never use the stop loss, and you can go negative 1,000%. He would be in like a negative 1,000%.
Holy fuck!
And he's like, I'm just gonna hold. I'm just gonna hold because, I've got,
Eventually, the market will switch.
Right. He'll hold it
See,
and
that's
be
like
negative
So what is
3,000%.
the course? So just on the guy, another guess him. So does he charge for the course he's taking? He's teaching.
Yeah, it's like 100 and something, $150 or something like that a month.
Oh, a month.
Yeah.
So then you can jump in that you're in this Discord for $150 a month, and then you just follow his trades.
Right.
Okay.
Like he'll do like 3 calls a week, and then you can get in his trades, or you don't have to get in his trades. But yeah, most of the times everybody's getting in his trades, and lately sometimes it's been, you get stuck in a trade negative for a while, and it's like you're sweating with bullets, and I'm like, I'm not getting away from this computer until I get out of this trade. I'm not going to work. I can't, you can't focus
Right.
because you're stuck in a trade.
You're stuck in a fucking trade.
But and I'm not
Yeah,
bad
there's nothing
rapping him at
against
all.
it. Yeah. But I don't know.
But
That's what I'm saying. Like, this is so back in the day. I used to like trading is so systematic for me. When I see it's, I know a lot of very big traders that work for big ass companies. Like, there's a lot of companies that try to hire me to come in and trade. And at that time, I was like, one, I don't like to get up at times when you tell me, and I like to not work when I don't fucking want to work. I retired a long time ago. And
Yeah.
so I was just used to be like, but I got a lot of buddies that do that shit. And, after a while, we spend years like going back and forth. But when you really know that master traders win 4 out of 10 trades, that's like a great day. That's a great thing for them. 4 out of 10. You're like, to me, that's garbage. So, but when you have that kind of like, that's the standard, right? That's the gold standard. 4 out of 10. Now you see when people start teaching and shit, and you see these different styles, and it's like horrendous. People are like, "Man, that's terrible." But the reality is, that's normal what people do. And the style that he's teaching is a style where, you know, you can, if you have to build a really good system, right? And that's why I'm saying he doesn't teach you guys the execution of his style. I don't think he knows how, because I think he's just following a thing that he learned and saw, and it normally pays off for him. And then when he's wrong, he just buys his way till it's right. And Carlos will tell you about that. Carlos tells you about that. So Carlos used to win 30,000, 40,000 bucks. And then I used to tell him, like, bro, you cannot do cross trading. You have to put a fucking isolated trade. You have to accept losses. And for 2-3 years, Carlos would just never listen to me. He just did whatever he wanted to do. Because he'd show me trades for 50,000, 70,000, 80,000. And I'd be like, bro, I'm like, I said, it's good in a bull market, motherfucker. And, unfortunately, one time, he was gone for a while, and I talked to him. He was like, man, I lost everything in this. I was like, how you lose everything? And he was like,
Yeah.
well, I kept buying in, and lost 50 grand on this. It hurts. Like, and that's the system that guy's playing with. You know what I'm saying? It takes one. I mean, fuck. He's probably lucky he went in a long trade on that October 9th when that motherfucker tipped all that far. He would have lost his entire account. $150,000-$300,000 in a second. Pow. You can't play that game. It's dangerous. right? And that's why I don't teach that game, because that's a reckless ass game, right? There's a
Yeah.
lot of
Yeah.
trades that we can, yeah. I mean, I can sit here and point out, hey, there's a lot of trades that we can run out here, and if I did where, um, let's say like we did very low leverage and we played a long game, right? We'd have a lot of successful trades, but they would take, a week, 2 weeks, 3 weeks. But the reality is that unless you had 30, 40 thousand dollars, you wouldn't make a lot of money. But it'd be like, 1,000%, 400%, 500% every fucking trade. But the reality is that that type of money you have to have that first, right? And if I was like, yo, don't worry about a stop loss, here's what we're doing, and I had you guys cost average buy, fuck, I would never lose a fucking trade. Like,
Mhm.
ever. Like sometimes we were posting and some guy was like, man, you gotta check out this guy. He's the greatest winning average. And then we broke it down. I was like, well, he's not running a stop loss and he's buying his way back. He's like, yeah. I was like, yeah. So I mean, what the fuck? I said, I post losses because I mean I'm not willing to give up that much to reposition myself. But if I bought in all my trades, I would never lose. Like, it just wouldn't happen. It's impossible because my system is
Mhm.
so designed to where I'm trading with such A trades, the odds are massive for it. But I'm also like, we have to break down. There's a lot of numbers that go into that on how much you want to make, what's your risk, what's the reward, what we're building out of. A lot of that's not duplicatable unless you have that type of bankroll, right? That's why we do different courses where it's breaking down the size of your bankrolls, reality, right? The reality is, 90% of people don't have $400,000 to be like, okay, let's fucking run this out, right? Which would be nice. Most people are bankrolling, $1,000, $2,000, $3,000. You know, they got to be very particular about their trades. They have to, execute the trades. That's why when you teach the masses, you have to teach where it's a evolution of growth, and that's what we're doing now. It's like you just have to learn how to, be in the best trades. Why you're in a trade, right? Why am I in a
Yeah.
trade? Why? How do I enter? And then you need to fix that in your brain so that every time you make a trade, you're not emotionally fucking distraught, right?
Right.
So that when you make a bigger trade, it's like it is what it is, right? It's going to hit or it's not going to hit. But here's the deal: I've got 7 bags that are $1,000, and I'm going to run these bags out. And the odds are 7 out of 10 I will win for 50%. The ones I lose will be 30. At the end of the day, I make 150% on my money. And
Mhm.
if I fix that and make it even better, my losses are literally 5% instead of 30. So my 3 losses end up being 15. And my wins, I can push my wins from 30 to 50 to 60, even up to 100. I could triple my bag in these 10 trades. That's me putting more work in. So you can always develop and become better, right? But the way, we just have the recklessness of no stop loss is just, it's too much. And if
Right.
you had a strategy, right, that was, a strictly A trade, right, which is, trading 4 hours high, there's a lot of ways to do it. Then I'd be like, okay, if you want to run a no stop loss entry trade, then you want to do a cost average trade, right? I could build a system. Um, Hold on. Keep your live engaging. Turning your camera off, showing static images, or being away for long periods may result in your live being ineligible for feedback. Okay. Got to move the camera a little bit. All right. So, I mean, we can run a no, this is a whole nother, this is what I'm saying. This is a personal system, right? So if you're in a master course and you came to me and you say, yo, VC, here's what I want to do. I got $10,000 and I want to basically, my risk tolerance is I'm okay with losing 10 grand. I got 30,000 to invest, but I want to turn this 10 grand into 100,000, right? Then we would develop a strategy that would be, okay, here's your strategy. You'd be running off the weekly and the daily, and you'd enter at their bottoms. And what you would do is you would enter for $2,000 at a limit of a 5x leverage. And then every time there's a pullback, we'd start off with limit orders that basically drop down to about 50% pullback, meaning if it went back even further, 50%, we would buy that entire margin up. And then as it moved forward, we would be buying the other thousands of dollars in there until we had a push until we hit our number, right? Meaning that we then take another 10,000, we put it in the account, and that's our safety net. So if those keep falling and the market keeps falling, we just keep cross buying until that other 10 is in there because we got a total of 30, right? It doesn't really matter. So we could buy, I mean, at that point, you could literally take Bitcoin down to 30,000 at this point and still make money. And you just cost average buy all the way down until eventually the market pumps and you have enough leverage that when it does pump back up, you have now hit your average, you've cost average bought yourself down to 50% lower than your entry, which means when it hits your entry, which is the lowest point of the market at right now, it would give you 100% times 5, which would be 500%. So if you had $20,000 in there and you double that up, you'd make your 20 grand, but it'd be times 5. There's your $100,000. We could do that in 6 months. But that's building a strategy based on that, right? So that's why when you're in a master course, we can build that course. But right now, what we're focusing on here is boot camp, basic strategies. What can the masses do? Just everyone coming into a community and trading together. What can they do together to create winning trades over and over and over so that these people can build a bag big enough to say, hey, man, I got 10 grand to risk. Let me ask VC about a master course. I want to do something crazy. I want to run this up. I want this 10 grand to I want to retire in 10 years. Like no matter what, I'm walking away in 10 years. And then we can build something on that. But that's not what the masses can do. You know what I mean?
Right.
It's kind of reckless in there. It's almost like a meme coin, but it's a lot less risk because, you're not going to see Bitcoin rug pull. We're not going to see Ethereum rug pull. You know what I'm saying? But
Right. Yeah.
it all comes down to the same thing. Once you have a strategy of the trade you want to do, the entry of the trade, the system is the difference between like regular traders and master traders. Systems are how do I execute with what I have to make the most possible money in X amount of time. That's all mathematical equations. That's why when we talk, I'm always like, well, that's a system versus strategy. Because right now you're in boot camp. Well, you need to learn like, okay, what trade am I doing? Right? Because what you're learning is what everyone else is. The majority of people, 90%, 99% of people are learning is how do I fucking just find a trade that I can rinse and repeat, and how can I get the same result more times than I lose? Right? How can I win more than I lose? And then how can I just follow the same steps to make that happen all the time, so I can at least make $300-400 to $700 to $2,000 a week and get out of my job or cover my extra bills or create a savings or some shit, right? And
Yeah.
that's where 99% of the people are, right? When you get past that, then it's master courses. Master courses are where we start saying, okay, based on who you are, what you have, what you want to do, what you want to create, you need to know what you're going to do, right? And you still need the same basics as is the boot camp is what trade are you doing? How do you enter? And then from there, it's just a difference of a system, right? Leverage, longevity, amounts of money, cross or isolated trades. Are we cost average buying in until it rocks? I mean, I got a guy right now, I call him Diamond Hand Joe. He's $150,000 into XRP. He doesn't give a fuck. It hit 450,000, 500,000. I told him to sell, rebuy back at $1.40. And when it was at like 280, he's like, no, right? Wouldn't he never sells? I call him Diamond Hand because his pot has reached 500,000 probably 4 times in the last 5 years. But every time we go down, he's at 100. Now, had he stacked at 250 the last 4 times, he'd already have $1 million, which he could have bought again today. Which would have basically at the end when XRP does go to $5, he'd have the difference between a guy having $1 million versus 6 million. I mean, I'll take an extra 5 million any day, but that's his decision, right? So that's where everything in the lesson in the system is different. Systems are how you execute, what you're executing, what your goals. The strategy one is find a trade. Find the steps to rinse and repeat, and then find an entry, right? That keeps you from losing, lets you know what leverage you're using, gives you the results of your targets and your stop losses that you can count on over and over and over, and you build your money there. Nothing wrong with making $300 a day. Change your life. $300 a day to change your life. There's different people at different levels.
Yeah,
That's why
I take $300 a day.
yeah, we teach the masses. So right now, what we have to do is design a Discord as a community that all post the entries correctly. Once we learn how to post entries, then we can develop more trades. And once we develop more trades, we can get data. Once we have data, we can create systems that allow us to execute on those trades at the highest level possible. So that way there's no more guessing. It's just this is the best way to enter. This is the best target. This is the best stop loss. It is what it is. Doesn't matter what the fuck you do. We've done this trade 1,000 times. These are the results. Don't fuck it up. Then you're down to the very simple thing. Do you do $100, $200, $300, $400, right? Or do you do the $1,000 and said instead of taking 50%, you take 40 or 30? Or do you do $5,000 and take 30? You see what I'm saying? Now you're making more money than everyone else while you're doing the same fucking trade. But that's the system. You know, that's really what it comes down to. But that has to start after we get the trades, right? So right now we have 2 trades. We have the 4-hour, which is a student trade. We have the 15-minute that we're developing. Once we get these down this week, we'll make videos on just how to execute them exactly. And then that'll be the 2 options. Then this next week while we're doing that, we're getting on everyone's ass on how to post the fucking trades you're entering. What trade are you entering? What's happening in strategy 1 that make you want to do this trade that is going live? Strategy 2. How are you fucking entering? The 10-minute green moon, the 15-minute green moon, the 5-minute moon reset, whatever entry you're doing, post that shit. Then post your results. Once we start getting results, then we'll know like what do we need to fix, right? And you guys are going to go through this with me. How to fix the entry, how to make it better, how to get that right. And then once we have that all set up, everyone will be like, yeah, this is what we developed. Instead of you just learning what I do, you'll understand why I do it. And you'll be able to just create it.
For what you're saying, this trade that I posted, the 168, my mistake was I didn't post it right when I got in it, right?
Yeah, so once you okay, so your post would have been like this, right? So if we go back to the Ethereum, right? Your post would have been something like why you're doing the trade, right? So
looking to get in a short at the break of the 70 or something like that.
Exactly. So you would have sitting there, okay, Ethereum exhausted, 15-minute RSI broke down from the 70 line. Okay, entry, right? Entering on the 5-minute blue moon, right? And then you post it.
Yeah.
So now we look at it and we know like, okay, the trade's going live because Ethereum's exhausted. I mean, you might even put on there that Ethereum's so you could have put on there 4-hour RSI, stochastic RSI on Ethereum topped, right? And then we all know that means it's exhausted. That means we're going to be looking for a short. And then you could put on there 1-hour RSI breaking down Ethereum. Now we know that's a short. Then you could have put entry 15-minute RSI heading down, entering short. Right? Or put 15-minute RSI breaking down, waiting on 5-minute blue moon. Or you could have just put 5-minute blue moon going short on Ethereum. Now, the earlier post lets us know that the 4-hour was exhausted, the 1-hour was heading down, right? Which means you're going live on your trade. The next thing is, when are you entering? 5-minute blue moon. Boom, there's my entry. So now you have why you were looking for a short, the 4-hour was topped. Why the trade went live is because the 1-hour started heading down. And then your entry was the 15-minute RSI started to head down and there was a blue moon. Right? Or it could be 15-minute RSI heading down, entering off next 5-minute blue moon.
Okay.
And then you put your entry, 5-minute blue moon, entered Ethereum. 178.20. Yeah.
Post a picture of the entry and everything.
No, you can just type it in.
Oh, okay.
Entering now. 5-minute blue moon. My entry was 1,782.
Okay. And then I also did another post of a potential 4-hour trade, but it never happened. Was that post pretty correct, or
I have to go
there's
back.
one?
So are you talking about here potential? Yeah.
Yeah,
So 4-hour
yeah.
RSI on XRP broke the 50, along with stock RSI breaking the 20 this AM. Okay. So so here if I read it, okay, 4-hour RSI on XRP broke the 50. So that's down, right? Are you long on that?
Sorry,
That's an up.
that was a long because it
Okay.
popped up.
Okay. So 4-hour breaks the 50. Now normally we're looking for the 70, along with the stock RSI breaking the 20. So when you say stock, is that yours?
Stochastic.
Okay, okay, stochastic. Okay, so you got the 50 RS. So the XRP broke the 50, right? That would be the regular RSI, and then the 20 broke and the RSI broke the 20. What hours? What time frame was that? Was that the same
See,
4-hour? So you used the 4 hours. So on the 4-hour, you had it breaking the 50 and the RSI. It's stochastic broke the 20.
yeah, because I remember we said on the 4-hour look
Yeah.
for it the
Yeah, so that's fine. And then you put
for
on
it
there,
to yeah.
yeah, waiting for the next green moon on 10 or 15. If you can catch it with me, working, come up. Okay. So money line broke on zeros. And so did that 15, did the green moon come?
Never yet. I was looking for a 15-minute, but then I was looking for like the 10-minute for an earlier entry. But I think there was a 10-minute green moon, but I missed that because I was at work.
Okay, okay. Yeah, so this is a good way to post. We could go back and we could look at that if you had an entry to see if that hit, right? So here you have, so this tells me at 11:18, right, today, that's what was happening,
Hmm.
right? So I can look at my time frame. So if I go to XRP and today,
On the 4-hour, yeah, or at 1 o'clock, or
yeah, so I
for
can
me
go
it
to
was 1 o'clock.
yeah. So now I can look over here and say, okay, when you were talking about that, I could pull this up and say, okay, 11 o'clock. So normally 11 o'clock is going to be, let's see here. So my 11 a.m. That's on the 23rd, right? So 23rd, 11 a.m. So that would be something here. So if I look
Okay.
down, I can pull these all the way through. So this would be about my 10 a.m. Yeah. So this is when it would show up for me at 10 a.m. So it'd be about this time. So that's where I think you would probably be talking when it broke the 20 would be about here. And then this is when it broke the 50. Yeah, so you have it here. So it is the second one. So now if I go look at that and I kind of put that in this zone here, I slide over to the 10-minute. And when all that happened, you can see here that you were in a blue moon. And then that 10-minute never came until the volume. See, this is where you would have got if it showed up. But since it went negative, right, that's where it pulls this next move here. So that's where, with all the volume gone, this would be the next green moon. But you can see it's kind of negative in that zone there.
Right.
But it would pull on that section there where it would trigger, like if you were doing the entry on the green moon, it would be in this pocket here. Let's see if the 15 popped up. And so far the 15 didn't pop up till here. So both those are kind
So
of
is it true that when you're below the 0 line, you don't want to look for any longs?
yeah.
Or
So normally for us is, it would be this, right? If you go to the 5-minute, right? If the 5-minute isn't above the 0 line or the 10 threshold in volume, and a lot of
yeah.
times we wouldn't take a long in this position.
Okay.
See?
So anywhere below that is good because you want more volume.
You want more volume. Exactly. So right there, as we look there, we don't have any of that volume there. It's all
Mm-hmm.
pretty much, yeah, gone. So that's where the decision when this green moon hits here, right? We'd be sitting to ourselves going, we'd be thinking to ourselves like, okay, here's my moon, right? And we'll turn this into green. And that's our first moon. Now we have to say, okay, what are the steps for us to decide here whether or not we're entering this, right? And that would be, at that time when that moon actually hit, that's where we'd have to say, okay, well, what's our rule of thumb is, trade with your 1 hour, right? So if we go back here, you can see that both those candles at that time, notice how the 1 hour was heading down at that time.
Yeah.
So both of these right here would have put you in a position where the first rule is not to trade against the 1 hour. So that would have basically, when those moons hit, it would have avoided the entry because the 1 hour is heading down.
Gotcha.
And that's why we wouldn't have gotten those.
I see.
So that's why having those simple
So,
steps, those rules that we follow, protect us from getting into trades that we shouldn't get in. Now the thing is that once you see that happening and you see it kind of like fading down, you can, like, when what's supposed to happen isn't happening, then we know what will happen. What that means is if all this is hitting to saying that this orange line represents when there's going to be a long, and then you start to see the volume disappearing, and then all of a sudden the 1 hour starts to head down in this scenario here, right? Which would basically put you in a situation where you would say to yourself, man, maybe we're heading towards a short. See what I'm saying?
yeah.
Let me grab a water. I'll be right back.
Yep.
So this is kind of like, so these are why so this is a good example of why we have those, simple like safety steps, right? So you'll hear like people say, especially Gus. Gus will be like, "Don't trade against the 1 hour." This is an example of that. You see what I'm saying?
Yeah, yeah. If the 1 hour is heading down, don't go up with it. Don't go long.
Right. So right there, that saves you right there, because by the time that when the orange hit, which would be the basically saying there's going to be a long position. If you looked at the 1 hour, you can see at that time, it's actually the next 1 hour starts to head down. Right?
Yeah, yeah.
Which if you as you start to learn this and you start to trade here, what you would have done here is when you've seen that, it's like to say, we say when it's supposed to do something and it doesn't do what it's supposed to do, then we know what it will do. So now when that happens, you would have looked for the bounce. You would have looked for the move down, the second move up, and then you would have started looking to short in this position.
Yeah.
Because you caught the value not respecting the move. See what I'm saying?
Yeah, yeah.
Now, that gives you an opportunity there to kind of like grab something there. And like I said, it's always what you want to do is you go across here, measure the basic move just to see what it was, right? There's a 1.89. So this is why if you're doing a 50x leverage or 70, you grab that 1% move, because that's about average on every move that happens. And you set yourself up for, 35, 40, 50% gains, right? You would have hit that, no problem. And then you'd been like, oh, okay, I got paid for watching this. So then from there, you're in the next scenario, right? Which is where, what is it doing from there? So now it's building. So that trade has to redo. Now we're at the 1 hours at the bottom. So it's going to find some type of level support there. Now to see if it's going to bounce on the 1 hour and continue down, we look at the 4 hour, right? We can see that the 4 hour is starting to move down here, starting to like lose value, right? So now it's just a question of like on the bigger time frames, like if I go to the daily, right, and this is how I can tell like where we're at. So trading in the whole thing. So you can see here on the daily, if you go back to when the daily broke down, that was March 19th. So Thursday, right?
Mm-hmm.
So if you just have an overall look, right, just so you can kind of overall market. On Thursday, the market let us know that it was trading down on the daily. See what I'm saying?
Right.
So then you would have been more interested on Thursday to start looking for shorts throughout the weekend, because that's what it was showing, that it was weak, right? Now we're at the point where the daily is starting to bend. You see how it's bending? And you can also tell here, because we're getting a little bit of push on the daily, we actually bounced up a little here. Now what happens when we have a bounce? All right, there's a bounce, then there's a
pullback.
Right. That's going to let us know on this pullback, it's going to let us know how weak the market is, right? But from what I'm seeing, I mean, especially looking at XRP, it's holding, right? It went up to, I think it bounced up to 144 or something like that, and now it's like leveled out again. So from 136 to 144, and now it's finding its zone, even though right now the daily starting to level, the 4 hours just starting to kind of head down, right? Now that should have more momentum, but we can tell here that the daily's starting to turn up, which means we're not going to expect this 4 hour to actually run all the way down. We're going to expect it to probably bounce off the 80 and start to head the other way.
Mm-hmm.
Now there's, like I said, just looking at Ethereum, there's a lot of money in that market. We're starting to gain volume again. Now the big thing is, I already knew we were going to do this, because I posted the other day, like, wait for April 20th, April 15th. If you go to the weekly, right? The weekly is the market overall. So right now the weekly still has a upward movement here, you see?
Still below the 20, yeah.
Yeah. And once it breaks this 20, which is, going into April, that's going to be some momentum. Following week, we're going to get up to probably the 30 line, somewhere in there, maybe into the 50. And the next week would be bringing us into our April 20th zone. That's when we break the 50, right? We start getting the 70 side. that's where we're going to see the momentum, where it's like a snowball. As it builds up, it gets stronger. And that's where we'll see a crazy push when that weekly breaks above the 50s, getting to the 70 mark. Because once it gets up here, if it can break up there, we can get some
Mhm.
big moves here. Because that's where we see the biggest moves, right? The biggest
So now
pushes that happen.
since uh since I got out of that really good entry on ETH, when you because we I think I was on the phone with you originally when I at least when I added to that,
Mhm.
um when you want to go off of the weekly chart, what do you go down to for a better entry on the weekly chart? Do you go down to like the 4 hour?
Yeah, I mean, you definitely want to play. The minimum is, if you're playing to see this now, this is the amount of your bag and the amount of leverage, because that all
Right,
matters,
right.
right? If I'm doing a 10x, 5x, then I'm playing the daily, and the more the weekly and the daily, right? If I'm playing a
Mm,
10x above 20x or something like that, then I gotta wait for the daily, right? That's the daily and the 4 hour, because I need the 4 hour to be moving in my direction, no matter what,
right.
because my leverage is above 10, 20%. So I need my daily to kind of like sprout up. But if you're going 20, 30 or higher, then now you need to be working off your 2 hour, right? You need confirmation off these earlier time frames. So before I could really start looking about a long-term trade here, I'm working in the zone from 2 hours to like 2 to 1 hour, right? So first things first is, no matter what, I can't trade against the 1 hour. And right now you can see the 1 hour is flat, right?
Yeah,
So for confirmation here, I would want the 1 hour to at least, reject off the 20, come back down and start back up, or break the 20 and show there's momentum here, right? Because you gotta keep in mind, we still have a blue moon here.
hmm,
So I can't do anything on Ethereum long until that blue moon, at least becomes a 1 hour green moon, especially if I'm doing high leverage.
yeah.
Now, high leverage is, 35, 40, 40, 50, 60, something like that. But the good news is we did break above the 10 threshold. And right now we're doing the first move. We're doing a pullback. And it looks like it's steadying. And then the next move that comes out of here will be a better push. And then that'll trickle
Hmm.
where this 1 hour will become the 2 hour and the 4 hour. And eventually the weekly will look like this. And that's when we'll have that big move over the next 4 weeks.
Gotcha. Okay.
So right now, I mean, we're not doing like I said. I mean, it's a very slow market here, where it's like, finding its ground. But in reality, we're really, we're holding up to, the levels, right? Remember, the big pullback was $1.18, $1.20 on XRP. Now we're averaging 136, and we're starting to get volume back. It's starting to actually follow back into it. So Ethereum, I'd just be waiting for like a 1 hour green moon. If you want to cheat that, you go to the 45 minute.
Mm.
And you see the 45 minutes still heading down here.
Yeah, as long as your lower time frames are all, pointing in the right direction, you're saying you got a way better chance at hitting a longer trade.
Yeah, you got to run with you got to play with the bigger time frames are just the more numbers. Right? So
Yeah,
the more you stretch time frames, the more you stretch data, right? The bigger the
right,
time frame, the more data. And then the numbers change because the more data is different. You can have a splurge where during 9 a.m. in New York time till 4 p.m. New York time, there could be a surge in buying because the dip was so big. That doesn't change the narrative on the daily. It changes the narrative on the 4 hour.
right.
That could cause spikes on the 1 2 hour time frames, but let that circle out, and then Asia comes in and then dumps on that, right? So
Right. Yeah.
you need data from the daily, the 4 hour. You got to let them play out.
Hmm.
Right now the way it looks, how it's all set up is that these TPs here are based on there's an indicator called the algo indicator, right? We're still adjusting it, but the way it's thinking is that your stop loss would be 22.33, entry would be 21.67, and so you would be taking a short here until 19.69, right? Which at the end of the day, it's like, 21.20 is kind of where the average is. We have levels there. I don't think it's going to drop that much over the next, with the weekly heading up. So I mean, it's got a lot of changes it has to do there, but we do see where the volume is very, very slow here. But you also have divergence where the volume's slow, but the price is creeping up.
Right.
Right now this is it looks like it should be really weak here. The 30 minutes, you see how the 30-minute barely came up? But if you're looking
Yep.
across the price is going up right now.
Mm-hmm.
You got a divergence going on right now. And that's why I say, like, learning all these little things, they're interesting to watch, but then having a clear cut 1, 2, 3 step, a clear cut entry strategy, a clear cut rules, right? Knowing that your rule is don't trade against the 1 hour, right? When you have all that in your head, it's just safety nets to be like, oop, there was an XRP long, but the 1 hour was going down, so I don't take that trade, and it saved your ass.
And you might get lucky, but yeah, you don't hold that too long, huh?
Yeah, I mean, the 1 hour going down, you can't trade against the 1 hour, because the
Yep.
the 1 hour is the most common. That data pretty much represents the average of what the move will be. So the 1 hour and the 2 hour are pretty much the closest thing that you can get to, relevant momentum of the current, the next hour, right? So it kind of trickles you down to where the 1 hour is heading down and the 2 hours heading down. You got to wait 30 minutes to see what the hell is going to happen,
Yeah.
no matter what.
All right. Well, I'm gonna have to head out actually, unfortunately.
Yeah, you're good, man. But I just wanted to
Bedtime
get
for
to
me.
where I just wanted to get to where it's like, posting, right?
Yeah.
And that's why I put you in charge of that. Like, shit, every hour, 2 hours, post that in there. Like, guys, if we're putting up trades, let's post correctly, right? And it's once we start posting correctly, which is what I'm going to focus on tomorrow, the next day, the following day, all week this week, is because we need to get the basics down, right? Once we got the basics
Right.
down and we're all posting in that same scenario, then as we start to find these trades, right? So the 4 hour trade, there'll be a 15-minute video on how to enter it, how we strategy 1, strategy 2, right? Strategy 1, the trade; strategy 2, the entry, right? That'll go up. The 15-minute RSI, we pretty much have that down, so we're going to put that in there. So it'll be a 5 or 10-minute video of strategy 1, strategy 2, right? And that's it. So how to find it, how to enter it, and then how to post it, right? Once we have
Right.
that in there and we've got those trades posting correctly, then we can start, moving to the next thing, which is okay. Let's get another trade here developed, which we'll see what we get when we talk to Joey C, because Joey's going to come in and he's going to kind of go over the MACD, what he looks at, and then we'll have that whole thing kind of like set up. So that gives us another, version of what we're looking at, and then we can start like analyzing that as well. So now we'll have 2 trades posting for the next week, another trade, possible development happening, and then from those other 2 trades we'll develop better entries and different trades that come in there, right? Because right now we're just talking about the longs on the 4 hour. We're not even talking about the shorts. We're talking about the longs on the 15-minute. We're not even talking about the short, right? So then those 2 shorts will get developed. Joey sees, trade session one-on-ones will go on for the next week, and then that'll give us another, possible trade, and we'll have that in there. Plus, we still have Gwen. Gwen has another. She's in a trading group. They have an indicator, and she's been testing it out on crypto because they only do stocks. So then what'll happen there is, let me see if she's in here right now. That'll give us an opportunity to where, that's why I put this folder called Gwen's indicator calls, right? So I'm gonna get her to where she's posting her, because she's testing crypto. So it'll get it to where she's posting her crypto trades. Because just like them, we're going to break down their indicator, break down how they use their indicator, time frames and all that shit. And we'll spend time with them. And then we're going to have her, put that on crypto, and then we'll see how that goes. And if their indicator is good, then, we'll mess around and we'll buy it and we'll use it as well. So it's a group effort.
Sounds good.
We'll get there. But like I said, it all starts off with the basics of getting everyone on the same page, at least in the foundation wise, of how to call a trade, how to call the entry, and how to post the results so that we can get the data. Once we can get data, then we can develop trades better and entries better that everyone can do, because it's not everyone's saying the same language. We're all doing the same trade. It's all the same thing. Once that all happens, then we start developing more and more and more. But we can't get to that hurdle until we get that first part down. So that's what we have to knock out for the next 2 weeks is, calling the trade, posting the trade, giving the results of the trade, collecting the information from the trade. That's for the next 14 days. We got to get that down. Then from there, we have all the developments of the trades, and we're doing that in between. So that's kind of like our next thing for the next 2 to 3 weeks is, develop another trade, the 2 shorts, and then how to post them. So that'll be the 3 things that we always talk about. It'll be developing the trade, then it'll be how to post the trade. But how to post the trade will be in every single time, because that's what we have to learn in the next 2 weeks, no matter what. So in 4 weeks, we should be, everything in the Discord should look like 4-hour RSI, Doge, breaking the 20, boom. 4-hour, you know what I mean? We should see nothing but call outs.
Right.
Then,
Yep.
then we just have to execute.
Yep. And then you can monitor them all and see which ones win and which ones don't.